Hello, my dear CA Final students. This is your Mr. GST who actually makes GST good and simple tax for you. Yes, welcome to the video, complete video on the 55 case scenarios released by ICAI, the booklet, latest booklet. Okay, so this is a video and just a quick minute I want from you all to explain what is this case scenario all. So out of this 55, see already case scenario 1 and 2 are from RTP May 2025. Case scenario 3 is from RTP September 2025. Case scenario 4 and 5 is from RTP Jan 2026. So these 5 videos I would have added. Actually, I would have did the editing work and I have added those RTPs discussion. Obviously, have made in YouTube. So those same videos I will paste here. And 6 to 20 now I have recorded actually from this case studies, new case studies you can take that way. 21 to 54 old booklet, we had 34 case scenarios booklet. That video also I have uploaded in the YouTube. The same video I am now adding here. No changes in any whatsoever in the concept etc there. And case scenario 55 is same as case scenario number 7 in this booklet itself. So I am not recording it that. So this is how you will get all 55 case studies in this particular video. So please do watch this and please do like this and share with your friends also who are writing their CA final exams. That is how you can show your support and motivate me further. So enjoy your preparation with this case scenarios. Thank you so much. So case scenario number 2, if you see, as you know, like let us first go with the questions actually. The MCQ questions. Sir, the value of taxable supply on which GST is payable by Delhi head office. Value of taxable supply by Delhi head office. That means you should know Delhi head office sales. Okay, under FCM. Delhi head office sales under FCM. We should check. Next, value of taxable inward supplies on which GST shall be payable under reverse charge by Bihar power plant. So Bihar's RCM purchases. Bihar RCM purchases we should be knowing. Next, value of supply on which TDS under section 51 shall be deducted by Delhi head office. So Delhi head office TDS. Delhi TDS. Okay, fine. Next, here value of inward supplies, taxable inward supplies on which GST is payable under reverse charge by Delhi head office and Odisha plant. We have seen Delhi, Bihar, Odisha till now. Okay, so here I can say Delhi RCM purchases and Odisha RCM purchases. We have to see. Okay, fine. Next, which of the following statement is most appropriate with respect to sale of metal scrap? That we'll understand only when we see the question actually. Okay, no problem. Next, so the following statements, let us see. Sir, GST on value of scrap 45,000 metal scrap payable by. So Chhattisgarh plant metal scrap we have to see. Sir, Chhattisgarh plant metal scrap sale we have to check. Okay, in the question. Fine. Next, which of the following are not taxable under RCM? Which is the most appropriate option? So we should see, we should have a track of RCM transactions actually in the question. Next, this is altogether a different question. Now let us go to the case study. Sir, if you go to the case study, in this the case study, if you see, Vidyut Corporation Limited is a public sector undertaking, is a PSU engaged in business of generation of electricity from conventional as well as non-conventional sources. Okay, Government of India is holding 75% equity in the said company. Balance equity is held by institutional and domestic investors. Okay, company has taken separate registration under GST in each state where and all it is having the operations. The company is having its operations, is head office Delhi, as we have already understood in the question. Sir, head office is Delhi. Okay, now sir, they are also having their power plants in the states Bihar, Odisha and Chhattisgarh. So there are 4 places here: Delhi head office, Bihar, Odisha and Chhattisgarh. We have understood that from the question. Following transactions carried out by the company during the month of Feb. So here, sir, they have given sales information. This is regarding sales information. Okay. Let us see one by one: sales, taxable, forward charger, reverse charger, exempt, all that stuff. So now sale of electrical energy, sir, it is exempt under GST. So for all these things, no GST. So no GST. Fine. Bank interest, and it is exempt under GST. Exempt. So no GST again. House rent recovered from the employees. That means by giving the residential accommodation to the employees. Sir, residential accommodation obviously exempt under GST. Hence no GST again. So all these things doesn't matter. Okay. Next, rent collected from banks, ATM, post office, shops located in office premises. Please understand, rent collected from banks, post office, all these office premises. Now, this is commercial building. Commercial building, if you remember entry 5AB, sir, renting the commercial building by unregistered. So, supplier is unregistered, recipient is registered in RCM. Here, supplier is registered in all the locations. So, RCM will not come. Sir, this is a sale. I can say this is FCM sale. Okay, this is FCM sale. Next, sale of metal scrap under chapter 72, excluding TCS 1%, to Birla scrappers unregistered under GST. Purchases of metal scrap from unregistered person, RCM. But sir, sale of metal scrap to unregistered person, it is not given in RCM. So it is FCM only. So I can say this is FCM sale happily. So this is again FCM sale. Okay, fine. With this, we are done with this. Next, additional information. Transactions carried out by the people for Feb month. Sir, a supplied order, a supply order, sorry, a supply order for stationery items awarded by Delhi head office to Messrs Stationery Mart, New Delhi, 3,36,000, including GST in January. The vendor supplied stationery items worth 44,800, including GST 12%. Issued tax invoice in the month of February. Delhi head office has made the payment of the said bill in Feb by creating the vendor's account for that amount on the same date. The remaining amount will be paid in April. So now if you understand, there is a question regarding TDS concept actually, and for this, because this is a PSU, for them any contract which is like exceeding single contract value exceeding 2,50,000, TDS will come into picture. So here it is 3,36,000. If you see excluding GST, 3 lakhs will be the value. So contract value exceeding 2,50,000 on whatever the payment is there, excluding tax. Excluding tax, it will be 40,000 because they said 12% is GST rate. 40,000 into 12%, 4,800. So 40,000 will be the value of supply. On 40,000, TDS will come into picture. Okay, so TDS at 2%. Now there is an MCQ here regarding TDS. If you remember, I have written here Delhi TDS like that, 8th one. So the value of supply on which TDS under section 51 shall be deducted by Delhi head office is 40,000. So one MCQ is over. Okay. Next, Odisha plant purchased office furniture 2,80,000. Sir, here this is purchase, TDS, FCM purchase. Okay, so nothing to worry. This is one transaction. Next, this Odisha plant purchased office furniture 2,80,000 during Feb from unregistered dealer. If you are purchasing from unregistered fellow, obviously he would have not charged GST from you. So here, no GST on this. No GST implication, nothing. Next, sir, a board meeting raising term loan for project expansion was held in February. Delhi head office paid 20,000 each as sitting fees to 4 independent directors. Sir, sitting fees paid to directors is coming under RCM. So, 80,000 director remuneration RCM purchase. This is RCM purchase. Okay, hope you are clear with this. And further, it paid 80,000 to one of these directors, and understand all the directors are registered under GST. That is very important point here. Why? Because sir, further, it paid 80,000 to one of these directors who rented the office building to Delhi head office. Sir, one director rented office building to Delhi head office because the supplier is registered. It is a commercial property. Supplier is registered. RCM will not come into picture. So, director renting the building, renting the commercial building for the company is subjected to FCM only. So, this 80,000 purchase is again FCM purchase. Okay, fine. Next. Sir, for safety and security at its head office power plants, the company engaged private security as well as CISF. That means government is providing security. Okay. Sir, CISF, Delhi head office is not making any consideration, but Bihar plant is paying 10 lakh, 8 lakh and 14 lakhs they have paid to CISF. And if you understand, this is services received from government which are taxable and taxable under RCM. So this is RCM purchase. Okay. ABS Security Services also provided a private security agency. RCM will come here only when the supplier is any person other than body corporate. But here this is a private limited company which is a body corporate, so RCM will not come into picture. Sir, this is FCM purchase. Okay, fine. Next, Bihar plant purchased a machinery in Feb from Sahu Enterprises, Patna, not registered under GST for 86,000. Full payment was made in Feb. Rate of GST of the said machinery is 18%. Because again this is purchased from unregistered person, sir, there is no GST here, no GST implication, nothing. Okay, fine. So the information we have decoded fully. All the amounts mentioned above are excluding GST wherever applicable unless otherwise specified. Okay. Based on the facts, answer the following questions. Okay, let us answer the following questions. Sir, you want one information regarding, we have already written here. Sir, we want information regarding Delhi sales FCM. Okay, what are the sales made by Delhi FCM? Because we want to know value of taxable supply, not GST payable, all that stuff. Okay, sir. So, value of taxable supplies made by Delhi head office. Sir, sales here also nothing, here also nothing. This is also exempt. This is one sale, sir, 48,000. And this is one more FCM sale. Here also nothing, sir, from Delhi head office. But there is other income, sir, 2,50,000. That is another sale. So 2,50,000 plus 48, sir, 2,98,000. Because all these below things are nothing but purchases. If you remember, the below information here given is nothing but purchases. No sales are there. So 2,98,000 is the answer. Okay, we have understood this. Next, value of taxable inward supplies on which GST shall be payable under reverse charge by Bihar power plant. So we should go with the purchases. We should decode the purchase of Bihar and on which tax is payable under reverse charge. Okay. Now, sir, all this first information is sales information. Now we are moving into purchase information, additional information. Here the purchase TDS FCM, that is of New Delhi. We want Bihar. Here no GST, we have understood that. Here Delhi head office purchases, director remuneration, all that. For that is Delhi. So Bihar, if you see, sir, Bihar only, this is under RCM purchase. Sir, this is RCM 10 lakhs. Nothing else here, no GST itself. Okay. So the answer is 10 lakhs. Bihar, whatever the purchase on which GST is payable under RCM is 10 lakhs. Hope you are able to understand. We have, see, first of all, we have understood the question. First, we went through the questions. We have understood what information we need. And then later on, we went to the case study. We studied the case study. While studying the case study itself, we have decoded the information and properly written there, which is sale, which is purchase, which is RCM, which is FCM. So this is becoming easy for us. The value of supply on which TDS. Oh, this also we have already answered. So we are done with that. Next, ninth one. Sir, value of taxable inward supply on which GST shall be payable under reverse charge. So for this, as I told you, we need Delhi RCM purchases and Odisha RCM purchases. Here, if you see, one interesting thing is all the figures given for Delhi, all the figures given for Odisha are different. If you do either for Delhi calculation or Odisha calculation and you get any one answer, obviously you need not do for the other thing. So now, for example, I'll just show you. Sir, Delhi RCM purchases, let me just check. Sir, Delhi RCM purchases. This is one purchase by Delhi, but it is not RCM. Here, director remuneration 80,000 is there for Delhi. Next, here nothing is there under RCM. And this is FCM purchase. So this is not required for us. Nothing else is there. So Delhi RCM purchase, sir, only director remuneration 80,000 is there. That means in any option, if there is 80,000, that will be the answer. Simple. Sir, if you see in this all answers, only 80,000 in Delhi is given only for one thing. So obviously B will be the answer. You need not calculate for Odisha straight away. You can save some time. Next, which of the following statement is most appropriate with respect to sale of metal scrap by Chhattisgarh? Chhattisgarh metal scrap sale. We have seen that metal scrap sale, correct? Here what is happening, sir? Metal scrap sale is done by Chhattisgarh. So as I told you, this is a sale covered under forward charge mechanism. Okay, let us see the question. They said GST is payable under reverse charge, first option. So no, it is wrong. GST payable under forward charge. Okay, correct. But the problem is that GST is payable on 45,000, not TCS is not included, correct, in value of supply. Sir, value of supply excludes GST, excludes TCS under income tax. So this will be the answer, not this one. Okay, because TCS will not be included in value of supply. Next, Sir, which is the most appropriate option here? The question is, what are the following supplies which are not taxable under reverse charge mechanism? They spoke about house rent, they spoke about rent collected from bank, they spoke about sale of metal scrap. Which is an which is not an RCM transaction? 1 and 2 not an RCM transaction, 1, 2, 3 not an RCM transaction, 1 and 3 or 2 and 3. Sir, if you see here, all these are nothing but sales made by these people, correct, or this company. And all the sales, whatever they made, house rent is also exempt there. No RCM. This one, no RCM. This metal scrap, no RCM. So all the three are not RCM transactions. So option will be 1, 2 and 3 like that, where it is given B. This is the answer. Okay, that is the next one. So with this we are done with case scenario number 2 as well. No, our strategy is first go with the questions in case scenario, not with the case scenario. So let us go with the MCQs first, so that we'll understand what are the requirements from the case scenario. In relation to goods, sold from its warehouse in Kandla, Gujarat, the company shall be liable to pay customs duty and IGST applicable, will be liable to pay customs duty, only be liable to pay IGST, not liable to pay any tax. Okay, fine. So something, they sold something from their warehouse, whether GST will come into picture or not, we have to see. In relation to advance ruling order received by the company in Rajasthan, the order is binding on the company only in Rajasthan, but on jurisdictional officer across all registrations of the company in India. The order is binding on the company across all states in India. The order is binding on the company and jurisdictional officer in Rajasthan. The order is binding on the company and jurisdictional officers across all registrations of the company in India. See, when you take any advance ruling in any state, that advance ruling will be applicable only for the respective state, and it is binding only on the company in that state, its branch, and the jurisdictional officers of that particular state, not across India. So option C will be the answer here. Without reading case study, we are done with this question C. In case company prefers an appeal before appellate authority against the order passed by adjudicating authority in Maharashtra, the amount of pre-deposit to be made is 11 lakh, 13.5 lakh, 10 lakh and nil. Please understand, when you are going for an appeal, sir, when you are going for an appeal with appellate authority, then later on you are going with appellate tribunal. Sir, when you are going for an appeal, here the very important point is, sir, you should make a pre-deposit of 10% of tax, not interest, not penalty, nothing. Only tax amount, whatever is involved in the dispute, on that 10% you should make a pre-deposit. Here, if it is appellate tribunal, then it is 20% of tax. That is very, very, very important. And sir, this is maximum. This, there is a cap here. This is maximum 50 crores. That is 25 plus 25, and this is 100 crore, 50 plus 50. Okay, this is the maximum. This is maximum limit, but this is the amount which you should deposit, or this one, whichever is less, you have to deposit. Okay, so please keep this in mind. Next, in case where tax has been wrongly collected by the company from the recipients, company shall pay such amount to the government, company shall refund back to the recipient, company shall deposit such amount with consumer welfare fund, company can retain such amount with itself. If you remember section 76 or 77, I am not able to recollect section number, but still, sir, whatever you have collected in the name of tax, you should pay that to the government. Okay, so company shall pay such amount straight away to the government. Okay, so that is what the answer. So without reading again question, we are able to, without reading case scenario, we are able to solve this second MCQ here. Next, in case of special audit being conducted in state of Madhya Pradesh, remuneration of CA is payable by the company. No, sir. Remuneration of CA in case of special audit is payable by the commissioner, determined by the commissioner. Remuneration of CA is payable by the company, directed by commissioner. No, remuneration of CA is payable by the commissioner, but expenses of the audit shall be no. Everything will be paid by the commissioner only. So option D will be the left out option. That will be correct. Expenses of examination and audit of records, including the remuneration, shall be paid by the commissioner. So that is the answer. So 5 MCQs in this case study. We solved 3 MCQs without reading the question itself. Now, sir, if you see case scenario 1. Vardhaman Limited, hereinafter referred as company, registered in Delhi. Okay, Delhi has operations in multiple states across India. Company has taken separate GST registration in all the states where it operates. Okay, during the month of January, the tax team presented following information in its report of the management. Okay, fine. Let us see that. Sir, what are those? First one. The company sold goods valuing 5 crores from its warehouse located at Kandla Port, Gujarat, to a buyer located in Ahmedabad by way of transfer of document of title. Next, the responsibility of clearance of such goods shall be on the buyer. Okay, the goods were imported by the company from Vietnam and not cleared for the home consumption since then. That means this is nothing but, sir, goods are sold from the warehouse even before clearance of the home consumption by way of transfer of document of title. So this is not at all a supply as per schedule 3. So there is no liability to pay GST. If you remember first question, first MCQ is based on that. So, sir, if you see the first MCQ, if you look at the first MCQ, sir, what is the answer? The answer is not be liable to pay tax, any tax or duty. That will be the answer. Option D. Okay, fine. See, 5 points are there, 5 MCQs. That means each point will give you answer regarding one MCQ. First MCQ done. This is second MCQ already regarding advance ruling. We have finished it off. Next, third point regarding that appeal, correct? The pre-deposit amount. The company received order from adjudicating authority in Maharashtra for a demand of tax 1 crore, and you need not worry about penalty 10 lakhs and interest 25 lakhs, correct? As I told you, sir, we should go with tax amount. Okay. Was confirmed by the adjudicating authority. The dispute in this case was similar to issue which was a favorable order got from advanced ruling authority in the state of Rajasthan. So, as discussed in para 2 above, the company feels that it has a strong case in the matter before appellate authority. So, when you are going to appellate authority, how much you should deposit? 10% of the tax, correct? So, what is 10% of tax here? The tax amount is 1 crore. So, 10% of tax is 10 lakhs. So, that is the answer. Remaining all MCQs we have finished. So, there is no need to read these questions at all. Okay, these particular points at all. So, without reading entire full paragraph or full case study, we have finished that case scenario 1. Now, let us move on to case scenario number 2. So, coming to case scenario 1, before going with case scenario, actually I have decoded the information for simplifying this question to you in quick time. So, before going to the case scenario, let us see the uh, MCQs here. If you see, before going through the case scenario, if you go through the MCQ questions, we may get little bit of idea what to see in the question. Here in MCQs, there are 6 MCQs. First, they're asking what is the value of taxable supply of Nagpur unit for October, gross GST liability for November. See, look at the way they are asking the question. You should see two things here: Nagpur unit value of taxable supplies for the month of October, but you should give gross tax liability for the month of November. That is what crucial here. So, same way in the second question, they have asked value of taxable supply of Mumbai unit of October and gross tax liability of December. Okay, so different months, and gross tax liability of retail showroom at Mumbai, that they have asked. And regarding them, what is the true statement they're asking? So we have to see the gross tax liability of Mumbai retail showroom also. So Nagpur unit, Mumbai retail showroom separately. Next, value of exempt supplies of Nagpur unit and Mumbai unit for the month of October, and value of exempt supplies actually by Nagpur unit as well as Mumbai unit. For what purpose? Now here, see, previous question it is like just value of exempt supply, but this one is value of exempt supply for the purpose of reversing ITC under rule 4243. So value of exempt supply, what and all you will take, that also we should see. Next, they want to go for an appeal against the order passed by the proper officer who seized the truck and the goods transported therein. So we are supposed to see which of the following statement is true here. So we will see the answers later on. Now we have understood a little bit of like what are the things needed in this particular question, and I am decoding this question for you. See, there is a company called Super Lever Limited, which is having presence in 3 states. For 3 states, it is having 3 different registrations. If you look at Maharashtra, it is having Mumbai and Nagpur manufacturing units and one retail showroom in Mumbai. But for all these things, it is having a same GSTIN, not separate GST registrations. Next, in Karnataka, it is present in Bangalore with a manufacturing unit, separate GSTIN. Gujarat, Ahmedabad, retail showroom, separate GSTIN. If you see, I don't remember anything in question what we have seen regarding Bangalore. So, Karnataka, Bangalore information, let us see whether it is going to be useful for us or not. So, these are the things. So, it is present in 3 states and 3 different registrations is the first clarity for us. They are giving you the information, following information for the month of October. And this information I have clearly decoded, which is outward supply, which is inward supply, where you will have output tax, where you will have input tax, where it is supply, where it is not a supply, all these things. Sale of taxable goods they give Mumbai retail showroom and Mumbai unit and Nagpur unit, they give the taxable goods. So this is output tax. Second point is regarding purchases. So it is input tax. So purchase details they have given. Payment made for security services, this is also purchase. Security services, if you remember, we can see something like RCM related thing, or we may not see, we have to check for that. Next, interest received on fixed deposits. You know, interest received is exempt under GST. Okay, so this is your outward supply, but it is exempt. See, understand, interest received means you have provided the services of allowing your money to be used. So this is an outward supply, but exempt under GST. Next, sale of securities, where the securities were purchased for 2,75,000, sold for 4,50,000. This is not a supply at all, you know. Next, sale of agricultural land, where stamp duty is 1 crore 85 lakhs. Yes, you have sold it for 1 crore 85 lakhs, but this is not a supply also, because you know this is land. Next, sale of old factory building which was not used anymore. Stamp duty was paid on 75 lakhs. Okay, so 90 lakhs is the sale value, but stamp duty they have paid only on 75 lakhs, and this is also not a supply, you know, because this is also an immovable property. Okay, so we have decoded the information here. Now, if you see, they give additional information. Mumbai unit, where they are paying for security services, they paid it to Safe and Secure Solutions Private Limited. That means security services for Mumbai unit are provided by a company, body corporate. That means RCM will come only when the supplier is any person other than body corporate, correct? So here, the security services payment, whatever is paid, RCM will not come into picture. Okay, sir. But here, one more interesting point is this company also not registered under GST. That means supplier is non-taxable person, no RCM also. So, no RCM, no GST. So, GST implication only will not come. But for Nagpur unit, if you see, the payment for security services is made to Vigilant Solutions, a partnership firm registered under GST. So, this means that means here the supplier is any person other than a body corporate will have RCM liability, that you should be careful. Okay, fine. So this is something which we have understood from the first point. Second point, if you see, they told retail showroom at Mumbai. The sales, if you see, they told, sir, retail showroom at Mumbai, if you look at the sales for the month of October, for October month, it has made 6,50,000 sales. They gave breakup for this 6,50,000. And when they gave about the breakup, they told out of the 6,50,000, 1,50,000 worth sales they made mixies and irons, like iron machine. So, what we call as iron box in our house. So this put together they are selling. So this is nothing but mixed supply concept. So 1,50,000 mixed supply is there. Irons only, that iron boxes only they have sold separately also worth 36,000. Balance and all are normal sales, 4,64,000. So I have decoded the information here. So out of 6,50,000, 1,50,000 both mixies as well as iron boxes together as a package. This is a mixed supply. So 1,50,000. 36,000 iron boxes only separately they have sold. 4,64,000 are the balances, is what they give the information in second point. Third point, they told Nagpur unit has issued 1,80,000 worth credit notes related to, like, because the customers has made payment within the due date, all that stuff, within the credit period, all that. So we are giving them the discount for timely payment. And regarding this discount at the time of supply only it is known. So because it is satisfying all the conditions, like buyers are also reversing the proportionate ITC what they have taken, all these things. So those credit notes discount they can take. But one customer only, unprofessional fellow, is not reversing ITC. So if you look at that Nagpur unit, the information for November month, they are saying, sir, they made sales totally 16 lakhs, out of which credit notes are belonging to 1,80,000, satisfying all conditions. Yes, we will reduce that from the value. And I told you, one customer alone did not reverse the proportionate ITC. That means for that fellow only, whatever the discount they gave, that will be, of course, not eligible for reducing from the value. So what I did is 16 lakh total sales, 1,80,000 discount fully I am minusing, but one customer is not reversing that ITC. No, that fellow only worth 23,000 credit note is there. That alone I am adding it to the supply. So November month I can say the sales are 14 lakh 43,000. If you remember, sir, we are in the questions we have seen something gross tax liability, all these things. Okay. So for November month we have understood 14 lakh 43,000 is the sales made by this Nagpur unit. Okay. Next, fourth point, if you see, fourth point also similar way. What they did now? See, fourth point, what they are saying, sir, for delay in payment of consideration, customers have paid to Mumbai unit December month 3,15,000, and if GST is applicable, they have charged it separately. Sir, interest for delay in payment of consideration obviously subjected to GST, it will be added to the value of supply as per section 15 subsection 2, and time of supply says section 12 subsection 6 says automatically when you have received that, that will be the time of supply. So in December month they have received the 3,15,000 interest plus GST they have received. So 3,15,000 will be added to the value of supply. And in that month of December, they have also made some extra sales of 12 lakhs. That means if you ask me Mumbai unit, December month total sales is 12 lakh plus interest 3 lakh 15,000, 15 lakh 15,000 will be the value of taxable supplies provided, and on that only we should charge gross GST liability. Hope you are clear with this. Next, fifth point, if you look at the information, what they are saying now, sir, Mumbai to Nagpur unit we are sending stock worth 7,30,000. Mumbai to Nagpur unit, both are belonging to same GST registration, both are in Maharashtra. They are not called a distinct persons. So whatever is happening between them is not a supply. Number one. Number two, sir, Bangalore to Ahmedabad, 6,80,000 worth goods they are sending, sir. Okay, in that case, in the invoice what they raised, now they have charged only 5 lakhs. And you know, as we have seen, sir, when the recipient sale is between distinct persons, sir, when the recipient is eligible to take ITC, automatically whatever is there in the invoice that itself will take as open market value. So here for Bengaluru to Ahmedabad, value of supply, even though the goods actual value is 6,30,000, sorry, we will take it as 5 lakh only because recipient is eligible for ITC. Whatever is recorded in the invoice will be taken as open market value. So value of supply will be 5 lakhs here. Okay. Next, on October 23rd, a truck carrying finished goods caught by proper officer saying that e-way bill is not raised properly. So he is charging penalty and is passing an order. Here the interesting thing is order is passed on October 23rd, but it is communicated on October 24th. Please understand, you know, we have to go for an appeal to the appellate authority. This is the order passed by the department. So you can go to the appellate authority straight away within 3 months from the date of communication of order. So here, if you see, by Jan 24th, you can go to appellate authority. Okay. So this is what the point. One MCQ is there with respect to this. So the point is, yes, they can go for an appeal to appellate authority. So this is what the question. And from this case scenario, applicable GST rate on electronic irons, that is what iron boxes as I told is 18%, other goods is 12%. So all amounts mentioned in case scenario are exclusive of taxes wherever applicable. Okay, fine. So all amounts are excluding taxes. That interest also generally you have a practice of interest on delay in payment, including GST, you will calculate all these things, correct? So here you should feel that they are exclusive, sorry, because already mentioned here and already mentioned above also here. Separately recovered GST wherever applicable, like that. Right, let us see the questions. If you see the question, value of taxable supply made by Nagpur unit in October month. Nagpur unit, if you see October month transaction, this is the information. Nagpur unit, see, understand, if you see I have marked here outward supply, the outward supply exam, this is not a supply, this is not a supply, not a supply. That means only this one is the supply. So Nagpur unit made 13,50,000 outward supply, value of taxable supply. So the answer should be 13,50,000 here and 13,50,000 here. Both the cases it has been given. So we should do one more extra calculation because they have asked two questions here. For two questions, two different numbers. So first I will check 13,50,000 is there in which particular options. It is there in option A and option C. So option A or C should be the answer. Okay, there is one more question also. What is Nagpur unit gross GST liability for the month of November? If you see Nagpur unit November month transactions, in the information like additional information only it is available. Nagpur unit November month. Okay. So Nagpur unit, as I told you, November month sales 16 lakh, credit notes minus 1,80,000, but in that one credit note 23,000 is not satisfying the condition, so that we will add back. So total 14,43,000 is the sales, taxable sales for Nagpur unit. On that, you know, GST rate is only on iron boxes, it is 18%, remaining all cases 12%. And iron boxes are sold only in the retail showroom of Mumbai. They did not mention anything about that information in Nagpur, all that stuff. So here it is 14,43,000 into 12%. So it should be 1,73,160. Okay. So the answer is 1,73,160. The answer is option C. So option C is the answer. Okay. This is first MCQ. Second one, value of taxable supplies at Mumbai unit for the month of October. Mumbai unit for the month of October. Again, if you see Mumbai unit for the month of October, in this information only we have October month details. Mumbai unit, as we have seen, 12,50,000 is the value of taxable supply. No other case, sir. There are two purchases and all other are outward supplies, no GST liability. So value of taxable supply is 12,50,000 for the month of October for Mumbai unit. If you see here, only in option D, you have 12,50,000 value of taxable supply. No other option has that. So you can straight away say this is the answer. But just to confirm, One more step is a gross GST liability for December without considering ITC, for the month of December. If you see in additional information, we got December details also. Hmm, December details. What are the December details for Mumbai unit? Sir, as we told, 12 lakh sales plus interest 3 lakh 15,000. So 12 lakh plus 3 lakh 15,000, on that 12% if you charge GST, you will get 1 lakh 81,800. So 1 lakh 81,800. This is also satisfied. So super. Option is automatically straight away D. Okay. Next, which of the following statement is correct with regard to gross GST liability for outward supplies made by retail showroom at Mumbai? Retail showroom of Mumbai, we have to see gross tax liability without again considering ITC. Hmm. So retail showroom at Mumbai. So this is retail showroom at Mumbai. They have made 6,50,000 sales. Okay, this 6,50,000 sales information only we have bifurcated, correct? Now you understand the importance of this bifurcation. See, 1,50,000 is mixed supply as we have understood. So 12%, 18%, both are mixed here, which we have to take 18%. That means on 1,80,000, you will charge 18%, and 36,000 purely iron boxes. So again, you will charge 18%. On other 4,64,000, you will charge 12%. So if you do that on 1,50,000, 1,50,000 into 18% M plus 36,000 into 18% M plus 4,64,000 into 12% M plus MRC will give 178,320. 178,320. Sorry, I did some calculation mistake. So let me do it again. 1,50,000 into 18%. 1 second. 1,50,000 into 18% M plus 36,000 into 18% M plus 4,64,000 into 12% M plus MRC 89,160. Sorry, there was some other M plus MRC, I guess. So it is 89,160. So this option A should be the right answer. Okay, gross GST liability of retail showroom without considering ITC for the month of October. So option A. Next, value of exempt supplies provided by Nagpur unit and Mumbai unit for the month of October. For the month of October, if you see value of exempt supplies, October we have got the information. Now understand exempt supply meaning. This is what you may do some mistake. Exempt supply means which are wholly exempt, which are nil rated, and which are non-taxable also. But you should take non-taxable goods or services. Non-taxable goods or services. Here there is security, which is not a good, and there is land, building, all these things which are not goods. You should take only non-taxable goods or services. For example, this one, alcoholic liquor, petroleum products, all these things you can take as non-taxable goods. Security is not at all in the definition of goods, you cannot take it. It is not in the definition of service, you cannot take it. Land and building, all these things are not goods or not services, you cannot take them. So exempt supply means here you will take only this particular point for interest income. So Mumbai unit exempt supplies are 0. Nagpur unit 1,08,000. That should be the answer. And in the question they have asked Nagpur unit first and Mumbai unit later. So Nagpur unit and Mumbai unit. Sir, the option is A. Nagpur unit 1,08,000. Mumbai nil. Okay, that is what the answer. Now the interesting part is this. This is the point where you might do some mistakes. Okay. Sir, what is this, sir? Now, value of exempt supply for the reversal of 4243. Here, sir, what and all I should take for reversal of ITC as per rule 4243? Now, please understand what and all are there for us without tax implication. These four, correct? First of all, this interest income we will ignore for the rule 4243 purpose. Next one, sale of securities we will consider, but we will consider only 1% as the value. 1% of the transaction value as the value we will take. So 4,50,000 means in that only 4,500 we will take as value here, and here nil. Okay. Next, sale of agricultural land in the vicinity of, so land also we will take, but we will take only when it is stamp duty value. So what is the stamp duty value? 1 crore 85 lakhs. So we will take 1 crore 85 lakhs. Okay. Here nil. Next, sale of old factory building. We will take, as I told, again only stamp duty. stamp duty. So stamp duty is 70,000, 75 lakhs, sorry. So here stamp duty is 75 lakhs will take, and this is nil. So these are the only four transactions. So what should be your answer? 75 lakh, 75 lakh, 4,500, and 1 crore 85 lakhs should be the answer. Okay, the reversal amount. So if you see that here, 75 lakh 4,500. So this is the answer. So option B. And next one, the Mumbai unit wishes to file an appeal against the order passed by proper officer, as we have discussed already. Sir, it should be done within 3 months from the date of communication of that appeal to the appellate authority. If you see the orders, they said no appeal, directly appeal to High Court, not required. Appeal with appellate authority, revisional authority. Revisional authority, you know, only to revise the order. So obviously option C is the answer. So this is the answer. So this is what case scenario number 1, what we have decoded. Hope you have got clarity on this. Hello students, this is your Mr. GST who actually makes GST good and simple tax for you. In this video, we are going to cover CA Final Indirect Tax Laws RTP Jan 2026. We are going to discuss in detail, of course, in a very quick time, right? So now, coming to the point, sir, case scenario 1. Case scenario 1, I always tell before going to read the case scenario fully, please make sure you are reading the questions so that you will understand what information we have to gather from this case scenario. So first, let us go with the questions quickly. Sir, company can take ITC of how much on product to be procured by it as a merchant exporter. You know, on merchant, as a merchant exporter, if you're acting, whatever the purchases you're doing, you will be paying tax at concessional rate 0.1%, that is 0.05% C, 0.05% is GST. So here let us see that. So here they have given how much. So 0.1% we can take ITC generally. Let us see that if you're acting as a merchant exporter. Next, if company does not export product D procured by it as a merchant exporter, till what date it cannot avail benefit of concessional rate under notification number. Okay. See, generally when you are buying some products, whatever it is, under concessional rate 0.1%, and you are acting as a merchant exporter, if you want to receive that benefit of 0.1%, whatever you are paying taxes on the purchases, all that, sir, you should export the goods, whatever you have purchased, within 90 days, within 90 days from the date of invoice, actual date of invoice. That is the provision. Let us see here again. Next, which of the following statements is true with respect to product D procured by company as a merchant exporter? Shravan Limited can claim ITC on inputs used for manufacturing product D under GST law. The company is permitted to export product D on payment of IGST also. See, generally, when you are acting as a merchant exporter, you can export the goods only under LUT or bond. So, payment of IGST point will not at all come into picture. So, this is wrong, obviously. Next, Someone Limited can claim ITC on inputs used for manufacturing. Yes. Under GST law, the company is permitted to export product D only under LUT, not on payment of IGST. This seems to be correct. Seems to be correct. Someone Limited cannot claim ITC on inputs used. See, when you are manufacturing something and exporting, obviously you can take ITC. There is no restriction on ITC when you are manufacturing and selling. Correct? Exporting. Sorry. So ITC you can claim. So cannot claim ITC is absolutely wrong one. Someone Limited cannot claim ITC on inputs. Again, cannot claim ITC is wrong one. So basically, prima facie, I feel like option B should be the right answer. Okay, even without reading the question, we have understood that. Next, compute the value of zero rated supplies. Okay, for the month of January, that is important. Next, assessable value of machinery cleared for home consumption by Swadeshi Textiles. Okay, compute the value of exempt supplies for the month of January for the purpose of reversal of ITC. Okay, so for getting all these informations, yes, we have to go through the case scenario actually now. Let us go through the case scenario. There is a company called BCM Limited, public company registered in Uttar Pradesh. That is important. It is engaged in manufacturing product A, product B, and product C. And in this product A is exempt. So A is exempt. Fine. B and C are taxable. Very good. Okay. Company is engaged in making cross-border supply of taxable product D. So here we can say D is like used for exports. This is the story of 4 products they are dealing with. Okay. Next, procured domestically from local manufacturers. That means they will procure product D something from local manufacturers and they will export all that. Fine. Further, it is engaged in supply of consultancy services. Following information is provided by the company for the month of January. Okay. Now, the company manufactured product A and exported 1000 units of same worth 8 lakhs. Product A is exempt, but when it is exported, sir, it is export. So it is a zero rated supply. If you remember, there is a question, what is the value of zero rated supplies actually? So this is a zero rated supply. So how much? 8 lakhs. Okay, this is the advantage when you are reading the questions. First, if you read the questions and come to the case scenario, sir, while reading the case scenario, you will always get the information easily, tuck, 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 like that. You can gather the information required for the answers so that your time can be saved in the main exam. Next, company supplied product C value 35 lakhs to Dhriti Limited, Noida, Uttar Pradesh, including product C worth 10 lakhs supplied to SES unit. You know, zero rated supplies, exports and SEZ sales are nothing but zero rated supplies. Again, there is one zero rated supply here, that is 10 lakhs rated supplies. Super. Next, company imported specialized heavy textile machinery from China on 2nd January with the CAF value 50 lakhs, FOB value 53 lakhs. It sold the said machinery for 62 lakhs IC sales to Swadeshi Textiles, Delhi. Now, this fellow is importing something and making high C supplies. And high C sales are nothing but neither SOG nor sauce. Sir, when it is neither SOG nor sauce, obviously that will not come under zero rated supply. First of all, zero rated supply means it should be either exporting or SEZ supply. So, this is not a zero rated supply. Okay, fine. So, there is no GST implication also on that. Fine. While clearing the goods for home consumption, Swadeshi Textiles. See, if you remember, there is a question on Swadeshi Textiles. What is the uh, value, accessible value for home consumption, for the goods cleared for home consumption by Swadeshi Textiles? Okay. The Swadeshi Textiles have purchased it for 62 lakhs and filed a bill of entry for 63 lakhs. After clearing the machinery for home consumption, they sold it for 70 lakhs. Now, please understand this adjustment is what little bit very important adjustment, tricky adjustment for you all. What is that now? See, generally, when you are making a sale of a high C sale, sir, generally, what is the accessible value for the goods when the goods are sold on high C sales, when they are being cleared for home consumption? What is the accessible value for calculating basic customs duty plus IGST? The law is generally what is the last price paid during that high C sales. Okay. Now, the point is here on the high C sales, they have paid 62 lakhs. Generally, if the question is silent and the story is just there, you would have taken value of supply. But here they have also given extra information. They have filed a bill of entry. In the bill of entry, they are showing the value as 63 lakhs. Generally, you know, sir, it is self-assessment correct. The porter will file the bill of entry declaring the value. Only the proper officer gets any doubt, then he will verify that all that. So here, when they are giving the bill of entry with a value of 63 lakhs, obviously the basic customs duty and IGST have been charged on that on 63 lakhs only. I repeat, in the question, if they give the transaction value of high C and nothing other information, and they ask you what is the accessible value, then the last price paid by the person on high C sales who is clearing for home consumption. Here, Swadeshi Textiles is clearing for home consumption. These people, whatever they have paid, that alone will be as accessible value. But here they have also given another information, that is value in bill of entry. So obviously you should take it as accessible value. So here, if you see this option, this one, fifth question, 3 lakhs will be taken as the accessible value. Okay, that is what the point. Fine, super. Next one, what is next point? So the company also purchased product Z for 10 lakhs from Press Corporation Japan on 5th January and directly routed product Z for supply to Jinsing Corporation China. So this is also nothing but Schedule 3 transaction. Schedule 3 transaction. So where the goods are not reaching India, obviously what? Out and out merchant trading, you know this. Sir, this is neither stock nor sauce, it is not at all a supply. Okay, nothing to worry there. So this is also will not come, this will also not come under zero rated supply category if you remember. Sir, it is not at all supply, sir. You cannot call it as a zero rated supply. Next, company purchased product D as merchant exporter. Yes, we have discussed about this for 7 lakhs. Tax invoice dated 1st January from Shravan Limited. Manufacturer. See, invoice dated 1st January. And if you remember, there is a question within what time it should have been exported. Within 90 days from the date of invoice, we have seen 1st January. Sir, in Jan again, you have 30 days left out. Feb, you have 20 days. Understand, in this question they have not given here. Actually, here this is happening. You don't assume, sir, I will assume it as a leap year. Okay, don't assume the like exceptional cases, assume only the normal things. Your assumption should be like not hypothetical, okay, reasonable. Next, in March you can take 31 days, so here it will be like total 89 days. So if you add April 1st, so then it will be the 19th day, 90th day, sorry. So 90 days is the deadline. So for April 1st, they should have exported this. April 1st of the next financial year. Super, that is the answer. Next, continuing the question, continuing the point, fifth point here. Product D was removed on 2nd Jan from the premises, supplied directly to a registered warehouse. Shravan Limited has procured inputs X, Y worth 1,60,000, all these things for manufacturing product D. Product D was exported by company to Gates Incorporation of USA. FOB of product D exported is 8,40,000. This 8,40,000 is nothing but a zero rated supply for us. 8,40,000. Okay, fine. Because exports, we are also calculating some question. Is there no what is the value of zero rated supplies done in that particular January month? Okay, 8,40,000. Next, did they ask anything regarding ITC? Value of exempt supplies, full value. ITC, how much you can take? Yes, there is a question on ITC. Let us see. Next, so if you see, there is a question on ITC also. Like if you remember, sir, on product D, whatever they are purchasing for 7 lakhs, what is the ITC available for them? Sir, 0.1% as we have discussed. We have to see first. This fellow is from which state we have discussed? This fellow is from Uttar Pradesh. Okay, and is purchasing product D from whom? Maharashtra. Okay, that means IGST obviously. So 0.1% IGST, that is 700 rupees should come IGST. Okay, so this is the option. IGST 700 is the answer for this. Next, so we have discussed that also. Next one, guys, understand here the important thing. Here there is some point for you to get confused. Shravan Limited has procured inputs X, Y, all these things. Here, yes, there are some purchases regarding this, but they have asked only for whom? Sir, company can take ITC on product D as a merchant exporter. That means they are talking only about this particular company, that is BCM Limited, how much ITC they can take. They are not talking about Shravan Limited or something else. Okay. So next. So Shravan Limited has procured inputs X and Y worth, okay, for manufacturing product D. That is for Shravan. If you are asking ITC, that's a different story. But here they're asking about the other fellow, the company here. So please be careful here. We are not supposed to worry about Shravan's purchases and ITC. That is the another what a trick here. What institute has played with the MCQ. Fine. Next, what is next one? Company supplied consultancy services to its subsidiary XYZ located and registered in Florida, USA, and its branch office. Here, if you understand, sir, they said they are provided consultancy services to subsidiary company as well as a branch office. Subsidiary company and branch office are different. Please understand that. Subsidiary company is altogether a different person. Sir, whatever the services we have provided to them or whatever it is, sir, it is fine export. But to your own branch, which is located just in a different country, is not your it is nothing but your distinct person. It is not export of service. If you remember export of service definition, sir, is not merely an establishment or a branch office located outside India. Okay, so if it is just a mere branch located outside India, you cannot call it as export. So here for subsidiary, whatever they have given 12 lakhs consultation charges, that will become export, but this 24 lakhs will not become export. This is another place where you might do mistake. Please be careful. Your subsidiary company is different, or your own company. I repeat, Infosys Bengaluru India is having Infosys New York registered in USA. It is a company incorporated in USA. Then it is altogether a different person. If you give some services to them, it is a export of service. But merely in New York, you are having just a branch, then it is not export of service. Please be careful here. So here, if you see now, we are calculating zero rated supply. Actually, how much the value is, right? So 12 lakhs we have to take. While reading the question, you should be very careful, because here most of the students will do mistake where the consultancy services to subsidiary company and branch office all together, then they said simultaneously 12 lakh 24. Mostly what we will do, we will take 12 lakh 24 both as what export of service, and we will feel like okay, this is fully zero rated supply. No, it is not like that. Please be careful. Okay, that is the case. Next, company sold a future derivative contract at NSC, which was due in the month of January, 20 lakhs. That contract has no delivery option. If there is no delivery option, obviously derivative is nothing but what? Security. So security is not a good, not service. So this is not at all a supply. It's not a supply at all. Okay. So that is the point. Next, yes, all the rates are 6%, 12%. All the above figures are exclusive GST. All these things fine. Next, PCM Limited makes zero rated supplies under a bond or annuity. Fine. We have already solved answer for point A, B. Sorry, first question and second question. Third question also we have understood, no relevant information. Yes, I mean no contrary information for our answer. So Shravan Limited can claim ITC on inputs for manufacturing product D under GST law. The company is permitted to export product D only under D and not on payment of IGST. Okay. Yes. And if you see here, this part is related to Shravan Limited, and this part is related to company. That is the person BCM here in this question. Okay, because they are referring it as company from long time. Next, the value of zero rated supplies. Yes, we have made zero rated supplies here, full calculation. Let us see how much it is. Sir, it is 8 lakhs plus 10 lakhs, 18 lakhs, 10 lakhs plus 8 lakh 40,000, 6 lakh 40,000. More safe. Lakh plus lakh 40,000 plus 12 lakh. 38 lakh 40,000. 8 lakh 40,000. Here it is. Fourth one. 38 lakh 40,000. Right. Then the last one, compute the value of exempt supply made by the company in January for the purpose of reversal of ITC. You remember, for the purpose of reversal of ITC 42, 43, all these things, sir, what and all we have to take? Sir, we have to take generally the exempt supplies which are wholly nil rated, all these things. And if you see in these transactions, nothing is exempt, but here, so the only one thing is, and high C sales, all these things will not come here. Please understand, scheduled transactions, except that sale of land and building is all these things, except that, sir, uh, and sale of warehouse to goods, these high C sales, all these things will not come. So here, fourth point we will not consider, but transaction securities we will consider. Transaction securities we will consider for reversal of ITC, but there we will take value of that. What? How much? Only 1% of this transaction value. Okay, so 1% of that. So what is the value of exempt supply here for reversal of ITC? Now here only the 20,000 amount will come in. 1% of that 20 lakhs. Hope it is clear for you all, because value of exempt supply for reversal, wholly exempt, nil rated, are non-taxable, and we can take schedule 3 transactions only, the land and building. Next, warehouse to goods, sale of warehouse to goods, but high C sales, all these things not be considered, but sale of securities also will be considered for the purpose of reversal of ITC, but the value is only 1% of the transaction. So 20 lakh is the transaction value on that 1% one. Remaining and all taxable supplies only, everything has been sold and tax paid, all that. And product A, it is an exempt product, but it is nothing but export, so you will not take it as exempt supplies. Okay, so it is a zero rated supply. So this is the answer for. So if you see, what are the options we got? A, what? A, two A's and all the B's. A's. For a second, I was scared. Like, how can the answer be all like B? Okay, I thought I did some mistake. Okay, fine. Right. Let us proceed. Let us proceed. Next, let us move on to case scenario number 2. Now, if you see case scenario 2, I have actually simplified this all these things for us to save some good time actually. So, first, as our practice, let us go with the questions. If you see here, the first MCQ is regarding, sir, they're asking you your aggregate value of inward supplies which are exempt under GST. That means you have to just tell what are your exempt purchases. Okay. In the next question, they're asking which of the following transactions undertaken by Kanpur and Agra units will fall under Schedule 3. That means they are talking about just Schedule 3 transactions here. Sir, if you see, even without reading the MCQ, you can case study, you can answer this MCQ. The first option, sale of agricultural land in the vicinity of manufacturing plant. One second. Right. So, sale of agricultural land is also yes Schedule 3 transaction. Sale of old factory building which is not used anymore. This is also Schedule 3 transaction. Sale of security is not a Schedule 3 transaction. Interest received on fixed deposit. This is also not a Schedule 3 transaction. So, option A will be the correct answer. Okay. So, 1 and 2. So, that is obvious. Simple one. Next, the value of inward supplies received by Agra Kanpur units retail showroom of Lucknow, all these things during the month, which is payable under reverse charge. So here they are asking purely, sir, what are the RCM purchases? Okay, simple. Next, they are asking time of supply for GTA services in the next MCQ, and they are asking about value of supply between Kanpur unit, Agra unit, and Punjab unit and Delhi. So value of supply for DP sales. So between the distinct persons, whatever the transactions happen, they are asking about the value of supply. That is what the question. So let us see the MCQ here. So here, while reading the MCQ, if you see here, the interesting part is that there is a company called Vision View Private Limited. So first thing, understand this fellow is a body corporate, okay, dealing with taxable textile products and is having units in Kanpur and Agra, both are in Uttar Pradesh, and also is having a manufacturing unit in Punjab and retail showroom in Lucknow, Uttar Pradesh. Retail showroom in Lucknow, Uttar Pradesh, and another retail showroom. So Lucknow, Uttar Pradesh. Let us mark it same. Another retail showroom in Delhi. And here there is a policy for the company. This is one important point. Obtaining single registration for all the places of business located in a state. That means if you see, sir, there is presence here in 3 states. One is Uttar Pradesh. In Uttar Pradesh, there are 3 things. Sir, one is Kanpur, the other is Agra, the other is Lucknow. But if you understand, there is only one registration for all these 3 things. That is what the company policy. And also company has a registration in Punjab. Punjab, they have the manufacturing unit. Okay, next retail showroom in Delhi. So for Delhi also they will take a separate registration. So if you see, there are 3 registrations here, 3 registrations. Okay, this is the point we have to understand. Okay, now for the month of January, they have given the following details. Let us proceed. Now, if you see, sir, I have also already understood, sir, they are asking about exempt purchases and RCM purchases. So this is sale of taxable goods. This information is just okay for us, not relevant. Purchase of taxable raw material. We want purchases which are exempt and which are RCM purchases. So this is also not relevant for us. Next, payment made for security personnel. So that means for supply of security services. This fellow is a body corporate. So if the supplier, if you see here, if supplier is a person other than body corporate, because this fellow recipient is a body corporate, then it will be RCM. So if you see, there is an information given here regarding this in point 1 below in the notes. They said Kanpur unit is making payment for security services to Guardian Shield Security Private Limited. That means here the supplier is also a body corporate. So obviously there is no RCM, it is FCM. But if you see Agra unit, it is paying for security services to Peacekeeper Security Solutions, a partnership firm. Supplier is not a body corporate here, it is a partnership firm. So this transaction is RCM. So that means here, sir, out of these two purchases, one is FCM purchase, the other is RCM purchase. Okay, this is the point. Fine, hope it is clear for you. Next, sir, freight paid to Fleet Wave Cargo unregistered GTA. Unregistered GTA, that means RCM purchase straight away. So both these are RCM purchases only. Okay, so both are RCM. Next, so that is the point number 3. Next, point number 4, sir, it is Fleet Wave GTA services from unregistered GTA. So obviously RCM, both the cases, yes, it is RCM. Next, freight paid to horse cart puller for intra-city transport of goods. See, transportation of goods by road other than GTA and courier agency is exempt. So this horse cart puller is not a GTA, not a courier agency. So this is exempt under GST. Okay. Next, loading and unloading charges paid to laborer, yes, taxable, but still this is a non-taxable person. No GST implication and not relevant in the question also for us. Nothing to worry. Next, payment to Swift Ride Services Private Limited for renting the Innova cars hired by senior officers of manufacturing unit. Please understand, here renting of cars, actually this is the purchase, but this is not RCM purchase, if you understand, because the supplier should be a, here cars are being taken on rent by the company, this is a body corporate, but the supplier should be non-body corporate. But here the supplier is Swift Ride Services, which is body corporate, hence no RCM here. Okay, no RCM. Next, rent paid to Lucknow Municipal Corporation for retail showroom. So rent paid to local authority by a registered person, sir. This is obviously RCM, sir. Next, interest received on fixed deposit. This is nothing but the supply provided by us to the bank. We are allowing bank to use our money and it is exempt under GST. So this is an exempt sale. Next, fees paid to state government for certification relating to safety of workers. Such certification is statutory requirement for manufacturer. See, any certification for safety check, all these things for the workers, etc. So that is exempt under GST. So this is exempt. Sale of security is neither SOG nor SOS. That is neither supply of good nor supply of service. It is not at all a supply. Next, sale of agricultural land and old factory building. These are schedule 3 transactions. We have already understood and we have answered that MCQ also before coming to this. And if you see the additional information, as I told, Kanpur unit GTA services and Agra unit GTA services, we have discussed about that. Adjustment 2 here is a very, 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 very important adjustment because related to amendment in section 13 subsection 3, time of supply for RCM services. If you remember, sir, there is an amendment where time of supply for RCM services, sir, the amendment is time of supply generally for RCM services is 61st day from actual date of invoice or date of payment, whichever is earlier. But if the same tax invoice is issued by the recipient, sir, it is actual date of invoice or date of payment, whichever is earlier. So this particular thing is based on that actually, if you understand. Sir, Fleet Wave GT Cargo has issued invoice for transporting the goods, the services on Jan 5th. But that is not relevant for us here because GTA is an unregistered GTA under GST, so it will not issue tax invoice. So the Kanpur unit and Agra unit, what they have did now, please understand here. Sir, Kanpur unit made payment on 27 January, Agra unit made payment on March 28th. But the important information for us is tax invoices are issued by Kanpur unit and Agra unit for this on Feb 1st and Jan 29th respectively. So here recipient is raising the tax invoice. So 13 subsection 3, the amended one says if the recipient is raising the tax invoice, at the time of supply is actual date of invoice or date of payment, whichever is earlier. So if you decode the information given below here, tax invoice is issued by the recipient. So what I have did here, Kanpur and Agra clearly have segregated the information. And Kanpur, when they are issuing tax invoice 1st Feb, when they are making payment 27th Jan, so the time of supply will be 27th Jan. Same way, Agra, when it is issuing the invoice 29th Jan, when making payment 28th March. So whichever is earlier, 29th Jan is earlier, so time of supply will be 29th Jan here. So the again the amendment, everything I have written here properly for your revision. Latest amendment applicable for your exam, please be careful. Okay, that is what the point. So here for us we have an MCQ here for this. If you see time of supply for transportation services provided by fleet, so here we have to see what is that, both are 27 Jan 29 Jan only. So the option should be C here, option C, Jan 29 and Jan 27, Agra unit, Kanpur unit. In my discussion I have just written Kanpur unit and Agra unit, that's all. So this is what the answer for that question. So the time of supply for GTA services provided by Fleet Wave Cargo. Okay, now the next one. Here, the next one is, so stock valued at 7,30,000 was transferred from Kanpur unit to Agra unit. Now, please understand, Kanpur and Agra both are having the same registration of Uttar Pradesh. That means both are not distinct persons at all. Whatever the goods transferred between them will not come under Schedule 1 transaction. Okay, so this is not a supply, first of all. This is not a supply. Next one, if you see, sir, stock valued 6,80,000 was also transferred from Punjab retail showroom to Delhi. Okay, Punjab different registration, Delhi different registration. The same was billed to Delhi for 5 lakhs. Actually, the value is 6,80,000, but you have billed it for 5 lakhs. And if you see here, sir, they have clearly given Agra manufacturing unit and retail showroom of Delhi are eligible for full ITC. When the recipient, in case of distinct persons, sir, when the recipient is eligible for full ITC, obviously whatever the value declared in invoice will be taken as open market value, and that will be taken as value of supply. So here the value will be 5 lakhs. Okay. So if you remember, there is a question on this actually. So the value of supply between distinct persons. This one, stock transfer between Kanpur unit and Agra unit is not a supply. Value of supply by stock transfer to Punjab to Delhi is 5 lakhs. So this is the correct answer. This is the correct answer. Hope you are clear with that. Next, so let me see the other questions. So we have answered 3 questions, I guess. 2 more pending. Exempt purchases. Exempt purchases. If you see, we have made a list of exempt purchases here. The exempt purchases. Exempt purchase. 15,000, 15,000, 30,000. And yes, this one, 5,000 freight paid. So this is exempt. Guys, understand, loading and unloading charges paid to labor, nowhere it is exempted under GST. The only thing is the laborer are not taxable person, or they might be employees. So that will not have any GST implication. So total 35,000. So you have an option of 35,000 here. Yes, the answer is 35,000. Next. Yes, sir, there is a question on RCM purchases. What is the value of RCM purchases? So unit wise here, if you see, they have given Agra unit, Kanpur unit, and the retail showroom. So 3 things, let us take it clearly. So exempt purchases, if you see, sorry, RCM purchases. If you see in the next page here, no RCM purchases are there. It is only here. So RCM purchases, this is RCM, 1,10,000, 40,000. This is also RCM. Okay. So this is RCM. This is also RCM. This is RCM. So if you see in this total box, it is 3,20,000. In this total box, if you see 35,000, and in this total box, if you see 1,50,000, 320, 35, 1,50,000, 320, 35, 1,50,000, 320, 35, 1,50,000, 320, 35, 1,50,000. So option D. Okay. So this is what the answer for that. Hope it is clear for you. And one last, another small MCQ here regarding customs. So what is that now? Rajesh, an importer, cleared shipment of electronic goods. After clearance, he realized that duty paid was less than the actual due. That means he has paid less amount than what is actually due. Okay, super intelligent fellow, because of some clerical error. Now he wishes to revise the entry to correct that. Okay. However, recently the customs department initiated an audit and informed Rajesh about it. Rajesh wishes to voluntarily revise the entry details at this stage. Now please understand, when the customs department has initiated the audit and it has been already intimated to the taxpayer, now he cannot revise that. Okay. So which of the following statement is most appropriate in this regard? Mm, yes, Rajesh can revise. Wrong. Yes, wrong. No, a revision of entry is not allowed once an audit or such action has been initiated and the importer has been intimated about that. Yes, this is what the correct one. Just for safety, let us read the next option. No, Rajesh must wait for the. Okay, so this is most appropriate option. C is the most appropriate one. Okay, with this we are done with the MCQ part. Let us see the answers. So just to justify our discussion, D, A, D, C, C, C. D, A, D, A, C, D, A, D. Dad, triple C. Dad, triple C. D, A, D, C, C, C. Let us see. Okay. D, A, D, C, C, C. So with this, we are done with the MCQs part. Okay. So in this case study number 6, if you see, what are the questions here? So they're asking, Data Limited received registration certificate on 30th July. What is the ITC available for it? So that means they are testing something regarding section 18 subsection 1. In relation to transaction with Mr. Prem, they are asking time of supply of goods. Okay. Next, amount of penalty which would be leviable under section 74A with respect to payment of tax on delayed disclosure of outward supply. Right, we will see that penalty also. Next, what is the effective date of registration? Effective date of registration, within 30 days if you are applying, date of becoming liable, otherwise date of grant of registration certificate. Value of inward supply of solar panel under section 15. That means they have purchased solar panel. On that, what is the value we have to identify. Amount of total interest to be paid under section 50 with respect to delayed disclosure of outward supply, assuming 365 days in the year. That is the case study, the questions. Now if you look at this, sir, Data Limited commenced business on trading of taxable goods in the state Assam 1st April. 1st April. Assam, what is the threshold limit for Assam? Assam threshold limit is 40 lakhs. Aggregate turnover of the company crossed 20 lakhs on 31st May and 40 lakhs on 15th July. So Assam 40 lakhs because they are exclusively dealing with goods. So 15th July liable to register, and company made application for registration under under GST law on 25th July. That means within 30 days they have applied. So the effective date of registration is the question is effective date of registration, date of becoming liable for registration. 15th July is the effective date of registration. Okay. And registration certificate was granted on 30th July. Okay. Company has opted to file return on monthly basis under regular scheme. Company has exclusively engaged in supply of taxable goods only. Super. The company had the following ITC lying in books relating to inputs and input services on different dates. So 15th July immediately preceding day. We need 14th July. On 14th July, whatever inputs held in stock, input services you cannot take ITC. It is 15,000 you can take ITC. During the month of October, okay. So 15,000 is the answer here. Amount of ITC available. So 15,000. Okay. Next, during the month of October, company has installed solar panel at the office premises. Details are as follows. List price 5,50,000. Additional information not adjusted or given effect in the list price. Okay. Trade discount recorded in the invoice at 3% on the list price. So 5,50,000 on that 3% is 16,500. 16,500 minus local taxes paid 15,000. So generally 15,000 you should add. Let us see any other extra information is there. Cost of packing, outward freight, loading, unloading, installation charges 12,000 as a condition of sale. So plus 12,000. Apart from the above, Data Limited received 2 lakh as advance payment on October 2 from Prem, a customer, with respect to taxable supply. Regarding Prem, there is one question actually. So that is regarding 1 second. So regarding Prem, there is time of supply question. First, let us finish this answer actually, list price actually. So 5,50,000 minus 16,500 plus 15,000 plus 12,000. So it is 5,60,500. 5,60,500. That should be the answer. Next, for Prem, they have asked, in relation to transaction with Prem, what is the time of supply for the purposes of payment of tax? So here, for the purpose of time of supply of goods, we know actual date of invoice or due date of invoice, whichever is earlier. So 2 lakh advance on 2nd October. Advances are not immediately taxable for goods, you know that. So 10 lakh is the value. The company removed the goods on 9th October and issued the invoice on 10th October. So movement is involved. On or before removal, you should raise the invoice. This is due date of raising the invoice, but this is the actual date of raising the invoice. Whichever is earlier. Goods were received by Prem on 11th October and Prem had made the balance payment. 9th October will be the time of supply for 10 lakhs. That is option B. 9th October for both 2 lakhs and 8 lakhs. Okay. Next. In addition to the above, due to oversight, the company failed to disclose the self-assessed outward supply while filing GST 3B for the month of August. So while filing 3B of the August month, 2 lakhs they did not, on 2 lakhs they did not pay GST. Balance of ITC for the month of August in the electronic ledger was 10,000 each under CGST, SGST. You know, see, normally there is interest on this actually. Sir, you know that normally if it is like, this is not a delay in filing the return, hence there is delay in payment of tax. This is like disclosed in GSTR1 and 3B, they missed it out. So invoice missed out. So when they are paying tax, tax will come on entire gross liability. That is on 2 lakhs, GST rate is here. They are saying 9% CGST, SGST. So this is 18%. So 36,000 is the tax on that 18% interest. So they should have paid this for the month of August now. 20th September is the due date. So 20th September is the due date and remains till date of deposit. Company filed return for the month of August on due date 20th September. Okay. Company disclosed this supply for the month of Jan in the next calendar year and paid net tax after set off ITC, all that. Okay. With interest on 18th Feb. So from 20th September to 18th Feb, interest will come. So in September, you have 10 more days left out. October, 31 days. November, December, Jan, Feb. So it is 10 plus 31, 41, 41, 71, 71, 72, 102, 102 plus 1, 103, 103, 133, 133 plus 18, 143, 53, 151. 151 days. So 151 days divided by 365. Now 36,000 into 18% into 151 divided by 365. So it should be 2681, rounding off should be the interest amount, or we did too much of rounding off probably. So it is 2680, we can take this way, 1340 each. Okay, that should be the interest. Okay. Next, the proper officer issued a show cause notice on 25th Feb of next calendar year, demanding the penalty for late deposit of tax escaped supply relating the tax on escaped supply. Sorry, tax on escaped supply relating the month of August. Okay, so whatever, see, you have collected, you have self-assessed and not paid. Then for that, yes, of course, there is a penalty, 10% of the tax, or 10,000, 10,000, that is 20,000, whichever is higher. Tax escaped is how much? So tax escaped is nothing but, or tax not paid is on 2 lakh into 18%, that is 36,000. 36,000, 10% is 3,600 or 20,000, both CGST, SGST, whichever is higher. So 20,000 is higher. See, I'm not doing CGST, SGST calculation separately. So 1800 or 10,000 you can compare. Same thing, 3600 or 20,000, whichever is higher. So 20,000 will be higher here because they have asked total for both CGST, SGST. Here, please understand, this is one another point which you should be very careful when you are doing this MCQs. They have asked amount of penalty on both CGST and SGST. So total. Sometimes they'll ask only for CGST. Then you should be careful. The option should be 10,000 in that case. Okay. So be careful with that. So with this, I think we are done with all the MCQs, I guess. Right. So what are the answers? A, B, A, B, C. A, B, A, B, C. So that is what the concept. So coming to case scenario number 7, as I have already analyzed all these things for you to quickly cover and also made key notes here regarding that 4 points which I have observed here. So first let us go with the questions. So first question is, what is the taxable value of supply for the month of April? And this is the interesting part here. In the hands of Pukraj Gupta something. So in the hands of Pukraj Gupta, because here why this is crucial now, in the hands of Pukraj Gupta means, see, understand, sir, he might have made some sales which are covered under RCM. That means where the recipient is liable to pay GST, it is not that in the hands of Pukraj Gupta, so it will not be added here. So that part we should be careful here. Next one, they asked about TDS with respect to some transaction with PSU, maximum amount of pre-deposit with respect to appellate authority they have asked, and aggregate turnover of the current financial year, place of supply for transaction with perfect planners. Now coming to this is a case regarding Mr. Pukraj Gupta, who is registered doing goods and services in Karnataka, and his outward supplies for the current financial year they gave here. These are the outward supplies of him. And these sales, if you see, if you remember, there is something aggregate turnover for the current financial year they have asked. So in that case, we will take taxable supplies 1 crore 40 lakhs, exempt supplies, aggregate turnover means all supplies, taxable, exempt, non-taxable, everything we have to take, right? So interest here, this is something interesting part. Why? Because interest you should ignore it for computation of aggregate turnover only for composition scheme. Remaining all cases, aggregate turnover means interest is an exempt income. Still you have provided services, you allowed someone to use your money for charging interest, and it is exempt under GST, but it is a supply. So this also should be added. And the another important point is regarding this transfer of goods to the residence of his brother, a well-known professional. Well, when brother is a well-known professional, obviously is not a related person. He will not come in the definition of family. So here, this is not supply because no consideration, no supply. Schedule 1 will not come into picture. So this will not be considered. So if you take aggregate turnover, it should be 145 lakh 50,000. That should be the answer. So option B is the answer here. Okay, right. Next one. During the month of April, Pukraj Gupta has made following sales. So this is nothing but sales of April month. If you remember, they have asked what is the taxable value of supply in the hands of Mr. Pukraj Gupta for the April. That means sales covered under forward charge, taxable, that we have to consider here. So taxable supply of goods they have given, yes, it should be added. Insurance agent services provided to Suraksha Insurance Company. Insurance agent services provided to Suraksha Insurance Company. This is RCM sale, so it will not be considered. Interest received for late payment from various customers. See, in GST, interest in two cases. One is allowing someone to use your money and charging interest, exempt under GST, but allowing someone to pay late. That means you have supplied goods or services and you are receiving late payment. In that case, whatever the interest you are charging, that should be added to the value of supply. So this should be added. Recovery agent services to Whipple Limited, a trader of goods. Recovery agent services provided to banking company, financial institutions, and NBFCs only, subjected to RCM. So this is to a trader of goods. So there is no RCM here. So it is taxable under FCM. Yes, it should be added. And the another interesting entry. Security services provided to Bachpan school, unregistered person outside the school campus. See, first here, whether it is taxable or not is the first point. And they're also checking RCM knowledge on for like security services. See, any security, cleaning, housekeeping, these services should be provided in the premises up to higher secondary school. Here, this is outside, so it is taxable first. Second thing, security services provided by a person other than body corporate. This fellow is a person other than body corporate, but recipient should be registered under GST. But here the school is unregistered, so RCM will not come into picture. So this is taxable under FCM. So you should add that. Next, this is simple one, renting the motor vehicle, where the cost of fuel is included, designed to carry passengers. So 2.5%, 2.5% GST rates means, of course, you know, RCM. So this is an RCM transaction. You will not consider this. Next, again simple one, received with reference to contract 5 lakhs with the PSU, and you know contract value is greater than 2,50,000. TDS provisions will apply, and on 1,50,000, so 1,50,000 has received. So this will be the supply, taxable value of supply. On that only TDS should come into picture, and the PSU is also from Karnataka actually. Mm, one second. So here supply by a PSU registered under section 51 in the state of Tamil Nadu. So in Tamil Nadu the PSU got registered, but the goods were delivered in the state of Karnataka as per instruction of PSU. Now if you see here, this fellow is registered in Karnataka. PSU is registered in Tamil Nadu, and goods should be delivered in Karnataka as per the instructions of PSU. So now this is 10(1)(b) scenario. 10(1)(b) scenario. Be careful here. Be careful here. 10(1)(b) scenario. Instructions is given by person from Tamil Nadu. So place of supply is where that fellow is registered. Tamil Nadu. So place of supply is Tamil Nadu here. Place of supply is Tamil Nadu. But this fellow is located in Karnataka. So TDS will come into picture. Be careful, ma. This is little bit tricky one. Be careful. So Karnataka, the supplier is located, and place of supply is in Tamil Nadu. So IGST should come into picture here, and the TDS will be IGST TDS, that is 2% on 1,50,000. Okay, that is 3,000 IGST TDS. So it should be IGST 3,000. So hope it is clear for you. Okay, please be very careful with this. Little bit tricky because you may do a mistake. Place of supply, assuming place of supply is also Karnataka, supply is also Karnataka because goods are delivered in Karnataka. No, because the goods are given under the directions, that is important here, were delivered as per the instructions of PSU. So in that case 10(1)(b) will come into picture. So be careful here. Okay, so this is the case. So we have did that also. So what is the value of taxable supply in the hands of Pukraj for the month of April? 4 lakhs, 10,000, 4 lakh 50, 5 lakh, 5 lakh, and 6 lakh 50. Correct? Where is the question? Oh, first one. 6 lakh 50. 6 lakh 50 is the answer here. Okay, hope it is clear for you. Next. Further, on April 20th, he hired a perfect planner of Japan to plan and organize his events, composite contract for all events. First event was organized at Mumbai, while second event was held at Paris. So, place of supply, if you see provisions, sir, the point is, if the event is entry or organizing the event, admission or organizing the event, for this, the place of supply provision says, according to section 13, if the event is happening in taxable territory as well as outside taxable territory, that is in more than one location where it includes taxable territory also and non-taxable territory also, then place of supply will be the location of taxable territory where the event is happening in taxable territory as well as outside taxable territory. Place of supply will be the taxable territory location. So here it is happening in Mumbai and Paris, so the place of supply will be Mumbai for both the events, okay, that is what the case here. Next, we are left out with only one MCQ, that is, in addition to the above, proper officer has issued an order under GST dated 10th April, raised a demand of 33 lakhs. Out of that, 20 lakhs is tax, 3 lakhs is interest, 10 lakhs is penalty. And this is an intrastate transaction. This information is related only to CGST. Okay. Now, Pukraj Gupta has admitted the tax liability of demand 5 lakhs, interest 2 lakhs. That means he says tax 5 lakhs, okay, interest 2 lakhs, okay, I'll pay. Remaining thing, sorry. Entire penalty demanded, he has disputed. Remaining tax, interest, all these things. Now, Pukraj wants to file this appeal before appellate authority. You know, there is pre-deposit amount, how much? Sir, pre-deposit, whatever you have accepted, you should deposit that 7 lakhs. And out of whatever you have opposed, in that when there is tax, interest, penalty, if there is tax, out of disputed amount of tax, you know, 10% you have to deposit here. So, 20 lakhs, out of that 5 lakhs you have agreed, 15 lakhs you have disputed, out of that 10%, that is 1.5 lakhs. So total it is 8.5 lakhs. Hope it is clear for you. So hope it is clear for you. Do you know 10% of the disputed tax, or sorry, so 10% of the disputed tax or 40 crores, that is 20 crore, 20 crores CGST, SGST, that much amount not there here, so nothing to worry about that. So 8.5 lakh should be the pre-deposit amount. That is case scenario number 7 for you. So 6,50,000 we got, and 3,000 IGST, 8.5 lakhs, 145 lakh 50,000, and Mumbai for both the events. Okay, so now let us move on to case scenario number 8. So coming to case scenario number 8 here actually. So first let us go with the questions. So first is they are asking about inward supplies covered under reverse charge for the month of December. Next, what is the eligible ITC ignoring rule 42, 43 reversal and all? What is the eligible ITC for the month of December? And what is the net GST payable in cash? And what is the time limit for issue of show cause notice in respect of GST inadvertently charged and collected on the goods in December, assuming FS does not deposit the same with the government. So whatever the tax charged but not charged, collected but not deposited to the government, for that, for issuing show cause notice, there is no such time limit. So option C should be the answer. So that is one thing. Remaining 3 MCQs, let us see. So they have given information. This is Farsight's, a proprietorship firm registered under GST in Chandigarh. They are dealing with variety of goods and also providing repairs and maintenance services. Electronic goods also they are dealing. For the month of December, they give the following information: outward supplies, sales, and they have given inward supplies, purchase also. Okay. So as you know, there is a question net GST payable in cash. Let us decode sales and purchases. Supply of goods to unregistered person in Chandigarh, out of aforesaid supply, goods worth 1 lakh were not liable to GST. However, FS inadvertently charged GST on such goods and collected the same from customers. So here, if you see at the bottom of this, they have given GST rates actually. Applicable GST rate is 18% except for GTA services, transportation services, 5%. Ignore the bifurcation of CGST, SGST, and IGST. Now, if you see 10 lakh sales, so 18% GST we will charge, including this 1 lakh, because whatever the GST you have charged, you should deposit that to the government. So here 1,80,000 is the output tax. Next, supply of goods to registered supplier located in Punjab. So on that also, yes, 18% again. So you will get 3,60,000. Next, repairs and maintenance provided to unregistered person. Recipient is unregistered, we are registered, no, we should charge GST. So 7 lakh into 18%. So 7 lakh into 18%. One second. The table here is completely messy with so many things. So right. 7 lakh into 18%. So 1,26,000. So this is the output tax. And input tax, if you see inward supplies, they are speaking about purchase of TV sets from registered supplier. During unloading of TV sets, some 5 LED, something like that. Sir, some goods got damaged, some TVs got damaged, worth 2 lakhs, completely damaged. But supplier refused to replace the same. So that means on 20 lakhs you cannot take ITC. Now it is only 18 lakhs. On 18 lakhs you can take ITC. So that is 3,24,000 you can take ITC. Purchase of washing machine from unregistered supplier. That fellow would have not at all charged GST, unregistered fellow. So no GST, no ITC also. Transportation charges paid to logistics. So GTA. This is RCM, but you can take ITC also. That is 5,000 we can take ITC. You know, we will pay GST and RCM, and same thing we can take as ITC also. Next, following information is also provided related to December. FS received security services from LML Limited, Chandigarh, amounting to 50,000. LML is unregistered fellow. First of all, this is security service. Supplier is a body corporate, LML Limited. So, RCM will not come. And because that fellow is unregistered, he will not charge GST, however. So, I can say no GST, no RCM. Next, rent of shop paid to Municipal Corporation of Chandigarh. So, local authority renting the immovable property to registered person by local authority, RCM. So this is RCM purchase. So RCM 50,000 into 18%. How much ITC also we can take? So we can take ITC also. ITC how much we can take? 50,000 into 18%, 9,000. Yes, 9,000 we can take. Next, legal fees paid to Prakash, senior advocate, legal fees 10,000. Again, RCM. See, here they have given turnover of the last financial year is 30 lakhs. Because of this, what we can understand, legal services are taxable here. So taxable under reverse charge is the different story. But in the question, if they have given instead of turnover in the last preceding financial is not 30 lakhs, if they have given some 5 lakhs or 7 lakhs, then that would have been exempt. So no GST, no RCM. Okay, but here in this case it is RCM, it is taxable, and ITC we can take 9,000 we can, sorry, 1,800 we can take, 10,000 into 18%. FS procured old used goods worth 5 lakhs on which GST is payable under RCM. Okay, goods were received on 25th December, invoice 24th December, payment debited on 31st December, but accountant was on leave and transaction recorded in the books on 1st January. See, this is RCM goods and time of supply will be based on section 12 subsection 3, date of receipt of goods or date of payment, that is debit or recording in the books, or 31st day from actual date of invoice, whichever is earlier. Here if you compare all these things, ultimately sir, date of receipt of goods will be earlier, sir. So 25th December, however, will be the time of supply. So on this GST liability will come in the same month, that is December month. So you can take RCM, but you can take ITC on 5 lakh. 5 lakh into 18% is 90,000. So that is what the point here. So we have calculated all the output tax, input tax. Let us go with the answer. Total value of inward supplies for December. Inward supplies, what and all are covered under RCM. RCM purchases 5 lakh, 5 lakh 10,000, 5 lakh 60,000, 5 lakh 60,000, 6 lakh 60,000. 6 lakh 60,000 is the answer. Next, eligible ITC ignoring reversal. Okay, eligible ITC. What is eligible ITC? Here 90,000, 1,800 and 9,000. 99,000, 1 lakh 800. 99,000, 1 lakh and 1 lakh 800. 1 lakh 800. Next, this 5,000, this 3 lakh 24,000. 3 lakh 24,000 plus 5,000 plus 1 lakh 800. 429,800 should be the answer. If I have done any calculation mistake, please excuse me. You just let me know that in the comment box if I have done any calculation mistake. But this should be the answer. Okay, right. Next, maybe because in the hurry of finishing the video, all that I might have done some calculation error also. So please ignore that, or please excuse me for that. I feel it should not be any error, but if at all any error, please excuse me. Next, we should go with what is the net GST payable in cash. What is the total output tax we have? Total output tax we have is 1 lakh 80, 3 lakh 60. So 180, 360, it is 4, 540, 540. Why to take risk? Let us use calculator. 180 plus 360 plus 126. It is 6 lakh 66,000 minus ITC. ITC is how much? As we have got 4 lakh 29,800. 429.8 ITC. It is 2 lakh 36,000. 2 lakh 36,200 plus RCM liability is there. Plus RCM liability. RCM liability in the question itself we have calculated here. 6 lakh 60,000. Sorry, that is value. That is value. On that we should see tax. Sorry. So RCM is 5,000 plus 9,000 plus 1,800 plus 90,000, 1 lakh 5,800, 1 lakh 5,800. So total liability is 236,200 plus 1 lakh 5,800. So it is 3 lakh 42,000 should be the amount payable in cash. Let us see, 3 lakh 42,000. Option is there. Let us see. Option B, D, D, C. B, D, D, C. Okay, right. Go through this explanation once. Okay, that is what the point. So with this, we are done with case scenario number 8 also. Hmm. Now coming to case scenario number 9. So let us go with the questions. First of all, they're asking you what is a simple case scenario. What is the effective date of registration, and by when you have to file the statement of stock of inputs in stock or semi-finished or finished goods, all that. So they are withdrawing from composition scheme. Within what date you have to upload this form is what the point. So within 30 days you have to upload this form. And next, what is the value of supply for the transaction they made, the equipment they sold to GGY Limited is the question. And what is the tax payable by LLD and Co for the quarter ending June? So as a composition dealer for that quarter, what is the tax payment? Time of supply for the transaction entered with Mr. Sachin. Document which has to be issued by LLD and Co for the transaction with Mr. Sachin. Now, if you see here in this question, so this is LLD and Co, a partnership firm which is into manufacturing in the state of Gujarat. It became liable for registration on 14th April and applied for registration on 16th May. That is after 30 days. Within 30 days, if you apply, that is different. But here, after 30 days, they are applying. So, the date of grant of registration certificate, 20th May, will be the effective date actually. So, the question answer for first question, 20th May. Okay, effective date of registration. Simple. The firm has opted for composition levy under section 10 and its turnover for the quarter ending June. This turnover they gave 82 lakhs, excluding the turnover till the date of becoming. So till the date of becoming liable for registration, whatever the turnover you do is not liable for GST. So that you exclude, and balance turnover is 82 lakhs. So from date of becoming that liable for registration till this June quarter ending, 82 lakhs is the turnover. And out of the taxable turnover is 80 lakhs, exempt turnover is 2 lakhs. Being a manufacturer here, you are liable to pay GST on entire turnover 82 lakhs, 0.5%, 0.5%. So that is 1%. So it is 82 lakhs means 82,000. But here, if you see the options, you should be very careful here. They asked each under CGST, SGST, each under CGST, SGST, each under CGST, SGST. The options you should be very careful. That's all. That is 41,000 under each head, 0.5%, 0.5%. So that alone, little bit you should be cautious. Apart from that, easy one. Next, mm, the turnover crossed 150 lakhs on 9th July and has opted to withdraw from composition scheme. So once your aggregate turnover cross the threshold limit of 150 lakhs, within 30 days you should file the form GST ITC. So within 30 days, within 30 days means 9th July. Here you should be careful in calculating the days also. Out of 31 days in July, 9 days are gone. So still you have 22 days. 30 days means you need 8 more days from August. So August 8th is the deadline. If you see in the options, they give 8th August also, 7th August also. So be careful when you are counting the number of days. So with that also, they are playing here with the options that we can understand. Okay, next. Mm, the firm provided a supply of equipment to GGY Limited. Regarding this, we have discussed. There is a question regarding what is the value of supply under section 15 subsection 1. Section 15 subsection 1 itself means what it is. Transaction value will be taken as value of supply. You know it. Okay. So they only clearly give one hint there. But to confuse you here, what they said, of course, GGY Limited is an unrelated limited company. On 20th July, market value 21 lakhs, wholesale value 22 lakhs, MRP 23 lakhs, but transaction was for 18 lakhs. And as per section 15 subsection 1, transaction value shall be taken as value of supply. So 18 lakhs should be the answer. They gave you the options to confuse, like market value, wholesale value, MRP, all these things. All those are irrelevant for us. Okay, that is done. Next, the transaction with respect to Mr. Sachin. They received one taxable service, that means purchase covered under RCM. Purchase covered under RCM, if you see here, sir, LLD and Co, they failed to issue any document to Mr. Sachin. Here, first of all, there is a question on time of supply, if you remember, for the transaction with Mr. Sachin. Because this is RCM purchase service, section 13 subsection 3 will come into picture, and you will compare date of payment or 61st day from actual date of invoice. 61st day from actual date of invoice is September 8th. So September 8th we will compare with Date of payment. Date of payment means date of debit in the recipient's books of accounts or date of entry in the recipient bank account. Because here you are talking from recipient's point of view, we should see from recipient's books of accounts and recipient's bank account. So to confuse you, they gave Sachin's books of accounts and Sachin's bank account details also. That is not relevant for us. So for us, it is only these dates. So we should compare 7th August, 14th August, and 8th September. Which is earlier? 7th August is earlier. So that will be the time of supply. Hope it is clear for you. So this is the only trick we have played here. That is, they are giving details of date of entry in the supplier's books also, in date of credit in the supplier bank account also. Because RCM, you should see everything from recipient's point of view. So the answer is 7th August. Correct? So 7th August. Now, please understand, they said here regarding this what. So the service received from Mr. Sachin. Sachin is a registered supplier, so he has raised invoice. Please understand here, while calculating time of supply also, I just forgot to focus on this point or tell you this. Invoice is raised by Mr. Sachin, so we are following these provisions. If invoice is raised by Mr. the LLD and Co, the time of supply provisions are different. That is date of payment or actual date of invoice raised by the recipient, whichever is earlier. Hope you remember that there is an amendment in 13 subsection 3, but this was not about that. Okay, fine. So here, because this fellow is registered and he gave the invoice and he will issue tax invoice. But as a recipient, what you should do, sir, as a recipient, see here, you failed to issue any other document. So, which of the following documents is mandatory to be issued by LLD and Co? Bill of supply? No. Payment voucher? Yes. Receipt voucher? No. Tax invoice? No. So, payment voucher, in case of RCM supplies, if you receive, you should give payment voucher to the supplier. Hope you remember that. So, that is what the option. So, that is what the answer. So with this we are done with case scenario number 9. So if you see here, case scenario number 10 actually. So first let us see the questions. They are asking what is the value of outward supply for the contract executed with NCDEX. Next, ITC available for the stay in A1 hotel in Surat. Total eligible ITC for the month of Feb. Nature of supply and the rate for the services provided to Mr. Rajendra. This is what the concept, or these are what the questions. Now if you see, this is the story of Mr. Suraj Rao, who is a sole proprietor, Rajasthan, registered and filing monthly returns. His turnover in the preceding financial year is 1.25 crores and is in the business of both goods and services. And he has given the following transactions here for the month of Feb. That is what the concept here. Okay. Now, in this case, he has executed a hedging contract for a commodity with NCDEX. That is what the value of taxable supply, something they have asked there. And that is for a price of 1100 per unit, 600 units. And original contract of purchase was made for 1000 rupees per unit. On the date of expiry of futures contract on 28th Feb, the rate of commodity was 900 per unit, and he squared off the contract without physical delivery. And if you see, if you are squaring off the transaction without physical delivery, then this is nothing but derivatives, and derivatives are not coming within the ambit of supply because being securities, so they are not supply. Only if you take physical delivery, then the underlying goods is taken as supply. But here it is the physical delivery is not taken, so it is not a supply. So no GST here. Okay. So if you see the answer for first question, value of outward supply for contract executed is nil. Okay. Next, they have provided repair and maintenance services to Mr. Rajendra on 5th Feb, where involving both supply of goods and supply of services also. He disclosed the value of goods 10,800, services 10,000, 25,000, sorry, separately in the invoice. If you see, there is a question regarding the nature of transaction and the rate of GST actually here. See, in this case, this is not mixed supply, this is not composite supply, or it is not neither sauce nor sauce. It is individually, see, whenever the price breakup is not available, you should worry whether this is composite supply or mixed supply. But when the price breakup is available, so the details are individually available, then you will tax them accordingly at their respective tax rates. We will not worry about whether it is composite supply or mixed supply. Okay, fine, very good. Next. These are the inward supplies during the month. They have asked you what is the value of ITC available for that month, correct? Total eligible ITC for that month. Okay, let us see that. If you see, purchased goods out of worth 20 lakhs from registered fellow only, but out of that 5 lakhs worth goods are exempt. That means on 15 lakhs you can take ITC. Okay. Purchased a truck for transporting the goods and no depreciation was claimed on GST portion also. Then when you purchase a truck, that is nothing but vehicle transportation of goods, so it is not blocked and you can take happily ITC because you have not even taken depreciation on the GST component. Okay. Next, 3,50,000 for renovation of office building and debited the same excluding GST portion. That is important. If you have debited the GST portion also to the profit and loss account, you have claimed the benefit already there, then you cannot take ITC. So here they are telling that obviously, works contract services or this for construction on your own account. If you are incurring any expenditure which is not capitalized, you can take ITC. So here it is debited to profit and loss account. So you can take on 3,50,000 ITC happily. Next, Suraj Rao went to Surat, Gujarat. Oh, Suraj Rao went to Surat, Gujarat. Very good. For a business meeting, which is mandatory under law, and he stayed in a hotel. Okay, A1 hotel for few days and paid 50,000 taxable value and paid the same. This fellow is from Rajasthan. The moment you read MCQ here separately, asking specifically what is the ATC available for the stay in hotel, there itself you should get some doubt. That means this fellow is from different state. If you go to a different state and stay in a hotel, there place of supply will be the location of immovable property. So here hotel is in Gujarat, place of supply is Gujarat, so they will charge CGST plus Gujarat state GST. So this fellow from Rajasthan cannot take ITC of it. So here no ITC here. Okay, so you can tell the answer here. Mhm. No ITC. ITC not available. So out of 4 MCQs, we are done with 3. Fourth one is pending. And here, if you see the other information, due to the accountant only 3B was filed on 31st March instead of 20th March. Suraj Rao collected an advance of 2 lakh plus applicable GST for the provision of service in the month of September. However, no tax was deposited. All these things, even though 5 months has elapsed. See, this information, other information, is completely irrelevant information for us. Why? Because the only MCQ left in this is what is the eligible ITC. For that, you should know the GST rates. All supplies are intrastate except otherwise mentioned. So all supplies of goods or services are chargeable for 9% CGST SGST at 18% IGST, except for spare parts which are chargeable for 2.5% each and 5% all these things. Okay, now coming to the point, sir, here if you see, mm, has purchased goods 15 lakhs. On 15 lakhs, you can take ITC here. Okay. What is the GST rate we should charge? All intrastate except supply of goods are 18%. So 9%, 9%. Next, IGST except spare parts alone 2.5%. Remaining all 9%, 9%. So here 15 lakh into, so 15 lakh you can take ITC. 15 lakh plus 8 lakh you can take ITC. 3.5 lakh you can take ITC. So these are the purchases. I don't see any other purchases actually. Mm. Yes, those are the purchases. On that 9% means 2,38,500. So, oh, they did not ask for breakup also. They gave the lump sum figure. So this 4,77,000. Okay, that is what the answer. Hope it is clear for you. Simple case study only, not that great complicated one. So let us move on to case scenario number 11. If you see here again, yes, of course, I have decoded everything for you. And before discussion, let us go with the questions first of all straight away. So if you see here, the first question is regarding the outward transactions for the month of August, where what is the taxable value of supply for August month, September month value of exempt supplies, TDS to be deducted under, this is important, under each head CGST and SGST how much mm, during the month of September, that will be deducted each under CGST under. Okay. Next, value of supply for related concern which is made in October month, what is that value? What is the last date for issue of invoice against Pump Motors which was terminated on 20th December? Now, if you see this question, you can answer even without reading the question, without reading the case study, because when any service is terminated, this is a service contract terminated, that means supply ceases before completion. What is the deadline to raise the invoice? On the date of its termination, when it ceases, on the same date you have to raise the invoice. 20th December should be the answer. Yes. Now coming to the case study here, this is a story about Jose and Co, which is a partnership firm from Kerala registered under GST. They are into manufacturing the motor pumps, the original equipments, and of course the related goods and services all over India. And they are supplying their goods through the network of its agents actually. Okay. For the month of August, they give the following sales. So August, there is a question. August month value of taxable supplies we have to see. Okay, right. So they give the points. 2 points are there here. One is supplied molds and dies to unrelated component manufacturer free of cost. The market value is 65,000. If he is not related fellow, no consideration, no supply. There is no GST here. Hope you have understood this simple one. Okay, no consideration, no supply. This cannot be treated as supply. Even though they have given market value, all these things, you should not get confused. Okay, you should not do mistake here. Next, provided free training on e-invoice and e-waybill to its agents free of cost, and value of such training was 1 lakh rupees. Again, this is free of cost. You may feel, sir, principal and agent schedule 1 para 3. Schedule 1 para 3 will come only in case of goods, not services. This is service, so automatically this is also not a supply. So this is the information they have given for August month, and we got all sales of August, and in the 2 sales they give, and 2 sales are not liable for GST. So option D will be the right answer for first MCQ. Okay, September month, what is value of exempt supply they're asking. For September month, they gave the information. Services of September month here, which are subject to deduction of TDS also under GST law. In this, if you see, water supply services are provided to Kerala Water Resources Management Board, which is a government authority in which 85% of the control is with Kerala government. Total consideration is 2,50,000. Please understand, water supply services provided to Kerala Water Resources Management here for 2,50,000. Here, first of all, no specific exemption for this, and secondly, consideration is 2,50,000. The contract value should be greater than 2,50,000 to bring TDS into picture. So here, TDS will not come into picture, and this is taxable only. There is no specific exemption for this. Next, composite supply of goods and services to Kerala government with respect to activity entrusted to municipality under Article 243W, in which value of service constituted is 25%. The consideration was 3 lakhs. Here, the twist in the story is every time when students is this 25%, okay, Article 243W, 243G, automatically this is exempt under GST. The 25% should be worth the goods. 25% of the value should be for goods, and balance 75% should be service. Here it is opposite. A value of service is 25%. That means goods is 75%. So this is taxable only, and TDS also will come into picture. So TDS 3 lakhs, on 3 lakhs TDS will come into picture. On the 3 lakhs into 2%, 6,000. But in the question they have asked each, correct? That means 3,000, 3,000 is the answer. So the answer is 3,000. Actually, to confuse you, in the options there should be 6,000 also. There might be such varieties also. Please be careful, because if they're asking each, you should write 3,000, 3,000. If they're asking as a whole, what is TDS as a whole, then it should be 6,000. Okay. Next, conducted training program, rainwater harvesting, consideration. Conducting training program on rainwater harvesting, consideration is 4 lakhs, and central government is bearing 76% of the expenditure. You know, if at least 75% of the expenditure is borne by the government, that training programs are exempt under GST. So it is exempt under GST. So this 4 lakhs is, sorry, this 4 lakhs is exempt under GST. This is month of September. Next, it starts October. There is a question of September month. What is the exempt supply value? So the answer is 4 lakhs. Next, October month supply is made to related concern. That means related person. Invoice is 5 lakhs. Market value is 8 lakhs. And recipient is eligible for full ITC. Like, kind and quality 7 lakhs. You know, if the recipient is eligible for full ITC, the related person, when you are making the supply. So obviously, sir, the proviso below rule 28 says that what? Whatever the value declared in the invoice, that shall be taken as value of supply. So 5 lakhs will be taken as value of supply here. Okay, so with this we are done with all the answers. So first one nil, second one yes 4 lakh, third one 3,000 each, fourth one 5 lakh, and fifth one 20th December. So yes, there is related to 20th December, that is the termination. Yes, the contract got terminated. Even without reading that question, you can answer it happily, because when the service ceases before its completion, at the time of cessation, you should raise the invoice. That is what the loss is. So with this, we are done with case scenario number 11. Right, let us move on to case scenario number 12, and 3 questions, only 3 MCQs. Which of the following statements is correct with regard to the liability for obtaining the GST registration for EcoWave? And assuming already registered, assuming that EcoWave is already registered with respect to taxable supplies, and along with that manufacture of exempt product Z, Other facts remaining the same. Can it take ITC on machinery purchased exclusively for manufacturing? Is it? If yes, then how much credit can be availed? Okay. Place of supply for the services provided by Shine Limited to Ecowave Seaside Hotel to Shine Limited. Okay, let us see the question, then we'll get better clarity here. So there is Ecowave Technologies Limited, Coimbatore, Tamil Nadu, exclusively manufacturing and selling product Z, which is exempt under GST, and company sells product Z only within Tamil Nadu. That means only interstate sales, not registered under GST, and all the purchases are also covered under FCM. That is not required for us in this question. Okay. To give better clarity in the question, they gave the statement. Turnover of Ecowave in the previous year is 55 lakhs. Okay. And expects the growth to be 20%. To address that growth, what they are doing, they are purchasing some additional machinery to manufacture Z on 1st April for 20 lakh plus GST. 20 lakh plus GST additional machinery. But because machinery uh, for manufacturing Z, obviously it is exempt. They cannot take ITC. However, effective from 1st August, exemption was withdrawn and GST 12% was imposed. Turnover of the company for the first quarter itself is 50 lakhs. They said something regarding registration here, if you understand. In Tamil Nadu, within Tamil Nadu, if you are making sale exclusively goods, 40 lakh is the threshold limit. 40 lakh has already crossed in month of June. But these people are exclusively making exempt supply, so they need not take GST registration. But on 1st August, the exemption is withdrawn. And now your product is being taxable. You should take registration. Threshold limit is 40 lakhs, but you have crossed threshold limit already, 40 lakhs. So 30th June you will not become liable for registration, but you will become liable for registration on 1st August, because 1st August, if you just turn back and see what is your aggregate turnover, it has crossed 40 lakhs. So you should take registration, and 1st August only they have withdrawn the exemption. So that is the reason. So if you see here, Ecowave not liable to register on 1st August is wrong option. Here we want which is correct option. Ecowave is not liable to register on 1st August, not liable itself is wrong option. Ecowave becomes liable to register on 1st August since its taxable turnover exceeds the applicable threshold limit of 40 lakhs till that date. Correct. Ecowave becomes liable to register on 30th June. No, because on 30th June they are exclusively making exempt supplies, so not required to register. So this is the correct option. So this is also wrong option. Okay. Here they are saying, now you can understand. See, assuming that they is already registered with respect to certain taxable supplies and also manufacturing exempt product Z, other facts remaining same, can it take ITC on the machinery purchased exclusively for manufacturing Z? Now you can understand better this question, because why they are saying assume they are already registered now, because section 18 subsection 1 clause D, ITC on capital goods is available when your exempt supply becomes taxable supply, but provided you are already registered fellow. So that is what they are stressing here. So on 20 lakhs, whatever the GST they have paid, 18%, that is 3,60,000 they have paid GST. And how many quarters it has been used? So from 1st April we should take till 1st August, before 1st August, immediately preceding day, 31st July. So 1st April to 31st July, April, May, June, one quarter. July comes in second quarter. So every quarter or part thereof, you will reduce 5% correct into 2 quarters. That means 10%. So 3,60,000 minus 10%, you will get 3,24,000 as answer. So you can take 3,24,000 ITC. Yes. Now after reading the case study, we have got a better clarity on this question actually. Okay, next one. In October, it plans to launch a new taxable product Y, and it enters into a contract with Shine Limited advertising company located and registered in Gurugram, Haryana, to arrange the display of an advertisement of Ecowave's newly launched product Y on a hoarding placed at a prominent location, Bengaluru, Karnataka, for initial 3 months. Shine Limited in turns enter into contract with the owner of the seaside hotel located and registered in Bengaluru, Karnataka for display of advertising. So now, if you see, seaside is giving supply to Shine, Shine is giving supply to this Ecowave. So Shine is giving advertising services. So obviously, section 12 subsection 2 general rule will come into picture. This fellow is registered in Tamil Nadu. So here place of supply is Tamil Nadu. and Seaside is providing the immobile property, the hoarding in that particular hotel to this Shine. So 12 subsection 3 will come into picture. So place of supply is location of that hoarding. So if you see for this, the place of supply will be Karnataka. So Tamil Nadu and Karnataka should be the place of supply for the question here. And here, one more thing, please be careful when they're asking the question. See first from whom to whom they're asking. First, they're asking Shine Limited to Ecowave. Shine Limited to Ecowave. The place of supply is Tamil Nadu. Then Seaside to Shine, that is Karnataka. So Tamil Nadu and Karnataka should be your option. If I am the paper setter, I'll give one more option, Karnataka and Tamil Nadu. Okay, so please be very careful in the exam with this type of questions or options. Okay, so with this we are done with case study number 12. So the next case study, again case scenario number 13, a simple one. So they're asking here, sir, supply of laptop along with laptop bag and supply of 10,000 kits to Ram fancy store is what? Composite supply, mixed supply, what is that? We have to see. Next, 100 kits given as free gifts to Jaipur customers. What is that? Also we have to check. Next, event management services provided and also service of transportation of chairs and coolers. How we have to treat it, how we have to tax it. We'll understand better once we read the case study here. So coming to the point. This is a story of Mrs. Kajal who is registered in Rajasthan and Jan month details are given. She has supplied laptop along with the laptop bag. So supply of laptop along with laptop bag to customer of Mumbai 55,000. So we can say supply of laptop along with laptop bag is composite supply only. Supply of 10,000 kits amounting to 5 lakh to Ram fancy store. Each kit contains or consists one hair oil, one beauty soap, one hair comb. This is mixed supply. We can understand that. And 100 kits gifted to the customers. All are unrelated on the occasion of Kajal's birthday. Okay. And the interesting point here is this. Input tax credit has not been taken on the goods contained in the kit. So because unrelated fellows, this is not a supply. No consideration, no GST, not a supply. Okay, event management services provided to brother free of cost, and brother is wholly dependent on her. So for the son's marriage function of the brother, so cost of providing that service is 80,000. So this is related person. Of course, this is supply. 1,400 chairs and 100 coolers are hired out to Function Garden, Ajmer, Rajasthan for 3,30,000 exclusive of GST, including cost of transportation of the chairs and coolers from Messrs. Uh, Kajal's godown at Jaipur to Function Garden. Now, if you see here, this point, event management is supply. First of all, this is supply, and its service of transportation of chairs and coolers is taxable only. Correct? So, option should be taxable supply. First point here, it should be taxable supply. So, this is eliminated. Here, this is taxable supply, but second one they gave exempt supply. This is also eliminated. Here they said not a supply at all. This is eliminated. So straight away you can just by elimination method also you can take it here. So taxable supply and taxable supply to be taxed at the rate applicable for renting the chairs and coolers. Of course, that is what the answer. Now if you see laptop bags, all these things is composite supply. This 10,000 kits is mixed supply. So option A. Next, 100 kits given as free gift, not a supply at all. So that is what the case study, simple case study, case scenario number 13. So coming to the case scenario number 14, actually easy one. So first let us go with the MCQ questions. They're asking you August month value of supplies, not taxable supplies, value of supplies actually. Next, TDS without bifurcating, what is CGST, SGST, AGST for the month of September, how much has to be deducted. Value of supply for the transaction made to Bharat in the month of October. Time of supply and rate of GST for the transaction with Saurashtra Associates. Place of supply for the event held in Bengaluru and Japan from Sun Limited. And of course, value of exempt supplies for the month of September is what their question. Easy in a case study here actually. So what happened is I have recorded this case scenario, but the screen was stuck and it was not responding. So whatever I have recorded again, I am re-recording it. Okay, fine, not an issue. Mr. Dinal Patel is registered in Delhi and he's dealing with goods as well as services on his own as well as with agents in his network. For the month of August, whatever the transactions he made. If you remember, there is one question regarding what is the value of supply for the month of August. Okay, so that is the first MCQ. So they have given two transactions here. One is that he gifted a watch worth 50,000 to Mr. Sudipta Banerjee because of Employee of the Year award. Okay, fine. No other gift was presented in the current financial year. You know, per employee per annum aggregate value of gifts not exceeding 50,000 is not a supply. So this is not a supply at all. Provided free training on e-invoicing and e-way bill to its agents free of cost, and the training cost is 1 lakh. Similar point we have seen in other case study also, actually case study scenario also. So same concept. So this is also not supply because principal and agent without consideration. Schedule 1 para 3 will come into picture only if it is goods, but this is service. So this is also not a supply. So both these transactions are not a supply. Hence, for the month of August, if you see what is the value of supply provided, the answer is nil. Okay, very good. Next paragraph or next topic is about he has provided following services for the month of September, received full payment of the contract value after deduction, subject to TDS deduction. These 3 points actually here given, all are above values inclusive of GST wherever applicable 18%. This is exactly the same thing which was there in ICAI study material also. So this fellow is supplying printed books to West Delhi Post Office. Total contract value 9,72,000, out of which exempt is 7 lakh, taxable is 2,72,000. Exempt means no GST, no problem. Taxable 2,72,000 is inclusive of 18% GST. If you remove the GST portion, it will come around somewhere around 2,30,000 something. So let me just see. 272 into 118. 2,30,508 something that way. So it is not exceeding 2,50,000. So here no TDS. TDS will come only if the taxable supply exceeds 2,50,000. Here this is not exceeding 2,50,000, so no TDS. Balance amount is however 7 lakhs is exempt, no TDS. Next. Also supplied services regarding maintenance of street lights in municipal area of East Delhi, where the supply of goods is not more than 25% and contract value is 3,50,000. This is an activity which is specified in Article 243W of the Constitution. You know there is an exemption for Article 243W, 243G, where the value of total, if it is service, also exempt, and even 25% value of goods used also, then it is exempt. So 25% goods, 75 service is also exempt, 100% service is also exempt. So because this is exempt, for exempt supplies, TDS will not come into picture. Next one, services for interior decoration of Andhra Bhavan located in Delhi. Service contract value is 12,39,000. 12,39,000. Government of Andhra Pradesh, which has registered in Andhra Pradesh. Same point again, I repeat, ICA study material, book back question or within the chapter, in TDS chapter. See, here this fellow is in Delhi and he is doing some interior decoration for Andhra Bhavan located in Delhi, that is related to immovable property. Place of supply also fall in Delhi. So location of supply and place of supply is falling in Delhi, but recipient is registered in Andhra Pradesh in a different state. In that case, TDS provisions will not come. This is taxable only, but TDS provisions are not applicable because if location of supplier and place of supply is in one state and recipient is registered in a different state, TDS will not come into picture. So this is the point. So if you ask me, sir, what is the TDS concept here? How much TDS has to be deducted? TDS question, where is TDS question? Second one, TDS should be nil, simple. Okay, next. Mr. Dhinal entered into contract with Saurashtra Associates. Saurashtra Associates, there is a question regarding time of supply and rate of GST actually. So on 1st June, he commenced the provision. This is a contract on 1st June, commenced the services on 5th June, completed it on 10th October. So date of completion of service is on 10th October. Okay. Invoice issued on 20th October. Date of invoice on 20th October. Next, received payment by check on 15th October, entered in the books on the same day. Date of entry in the books is 15th October regarding payment. But it got credited on 18th October. Credited on 18th October. In the meantime, rate of GST has been changed from 12% to 18% on 16th October. So 16th October change has happened. And the moment change has happened, within 4 working days, if the amount has been credited, then the date of payment will be date of entry or date of credit, whichever is earlier. So here credit is happening on 18th October, which is very much within 4 working days. So obviously you can compare these both things, and date of entry is earlier, so this you can take as date of payment. So this is date of payment you can take. Okay, now sir, you see, when there is change, check where this fellow date of completion of service is there. Date of completion of service is before the change, after the change, or before the change. Date of invoice is after the change. Date of payment is before the change. Always understand, completion is before the change, and along with completion, if invoice is there, invoice is time of supply. If payment is there, payment is time of supply. Both are not there, sir. Both are after the change only. Then whichever is earlier will be the time of supply. Okay. Don't say what if all the three are before the change. Then you need not worry about this provision actually. Okay. Section 14 will not come into picture regarding time of supply. So the point is here, this will be the time of supply. Toss 15th October. On 15th October, old rate is applicable or new rate is applicable? Old rate. So that is 12%. That is how you can just make it out. So the answer is 15th October and 12%. That is the answer. Okay. Hope it is clear for you. Next. The next one is he is renting out commercial building to Bharat and charging a rent of 19 lakh 50,000. And Dinal is paying maintenance charges of 1 lakh, which is charged by the local society, and these charges have been reimbursed to him by Bharat. Please understand, 19 lakh 50,000 tenant is giving me the rent, and I am paying to the local society. They are charging some 1 lakh rupees from me, sir. These are the maintenance charges like that. I am incurring that expenditure, and later on I am recovering it. Here you don't bring the pure agent concept, that is not applicable here. Please don't misunderstand. Here as a owner, I am incurring some expenses and I am recovering it from tenant. That will be forming part of the value of supply as per section 15 subsection 2 clause C. Okay, this is not pure agent concept. Please don't misunderstand. Okay, so as a supplier, I am incurring, I am giving you my property on rent. As a supplier, I am incurring some expenses and I am recovering it from you as a tenant. Okay, so this will be added to value of supply. And so this 1 lakh will be added to value of supply. And Mr. Dinal has paid municipal tax 2,85,000, 2,85,000, but he has not charged it from Bharat. Are you understanding the point? So whether this will be added to the value of supply? No, this is not added to the value of supply because it is not charged to the customer. So that is what the point. So I was just checking whether still the screen is working or not. Okay, so this is not added. So the value of supply here is 20 lakh 50,000, 20 lakh 50,000. The question is regarding Bharat. If you see value of supply 20 lakh 50,000 will be the answer. Okay, this is one important point which you should remember with respect to this particular maintenance charges 1 lakh rupees. Okay, please be careful with that. Next, for the month of December, Dinal hired services of Sun Limited, an event management company registered in Delhi. Similar concept we have seen even in case scenario number 7, if you remember. There the, I don't remember the event planner name actually, but they are located in Japan, something like that. Same, they are also in Bengaluru and Japan. We are conducting the events, but there the recipient supplier is in Japan and recipient is in India. So section 13 will come into picture. So if event is happening in multiple locations, one location is taxable territory. Now that taxable territory location will be place of supply. But here section 12 will come into picture because Dinal is also from India, Sun Limited is from Delhi, that is also from India. So section 12 will come into picture, not section 13 of IGST Act. Please remember carefully. So here the event is happening in Bangalore and Japan, but the recipient, that is Dinal, is registered under GST. So his registered place only will be the place of supply for both the events. So Dinal is from which state? Delhi. So he is registered in Delhi. So the place of supply for both the events will be Delhi. Okay. That is what the answer. Next, what is the value of exempt supplies for the month of September? For the month of September, you see the TDS concept related one. Exempt supplies are this 7 lakh is exempt supply. This 3 lakh 50,000 is exempt supply. So generally, you might forget this 7 lakh point and you may ignore that. So be careful. It is 10 lakh 50,000, not 3 lakh 50,000. Okay. See, for confusing you, they give option 3 lakh 50,000 also. So by mistake, if you do that, so gone. So remember that. So it is 10 lakh 50,000. That is what case scenario number 14 for you. Now, if you see case scenario number 15 here, first the question is very simple one, small one. They're asking they have provided direct selling agent services to Y Bank Limited and renting a motor vehicle to Amaze Tours Limited. On that, who shall pay GST? Who shall pay GST? Next, they have provided some security services to ABC Private Limited and PSR Trust. On that, who shall pay GST? Next, representational services availed from PB and Co. Is it supply or exempt, or is it eligible for ITC, ineligible for ITC? Like that, only small 3 MCQs. Now, this is a story of a partnership firm, all in one, registered under GST, providing various services under one roof. They have taken the regular scheme, paying tax under regular scheme, and they have given the details of March. They have provided direct selling agent services to Y Bank Limited, 4 lakhs. Now, direct selling agent services will come under RCM only if it is provided by individual. Here, these are not individual, they are partnership firms, so FCM will come into picture. Next, as we have already read the MCQ questions, we know what should be taken from the information in the question. So, what information is required? Only RCM, FCM, if you are seeing, that is more than sufficient here. Provided security services, that is supplying the security personnel to ABC Private Limited as well, registered under GST. So, supplier is non-body corporate here, recipient any person registered under GST. So, here RCM will come into picture. Okay. Next, provided security services to PSR Trust, an unregistered person. Recipient is unregistered here, so RCM will not come into picture. So, it is FCM, security services, you know. Next, renting of motor vehicle for transportation of passengers to Amaze Tours Limited, where cost of fuel is included. As you know, if the supplier is non-body corporate, here all in one is a partnership from non-body corporate. Recipient is Amaze Tours Limited, which is a body corporate. So RCM will come into picture. Same services they are providing, that is renting of the motor vehicle with cost of the fuel included to Priti and Co, a CA firm, which is not a body corporate here. So that means recipient is also not a body corporate. So RCM condition is violated. So here it is FCM. And availed representational services from PB and Co, a law firm, towards consumer court case. Here one interesting point is, this is what I felt a good point in this question, that is they have given all in one commenced business from February. This is information regarding March. They have started business in the previous month only. That means preceding financial year they have no business. That means aggregate turnover in the preceding financial year is zero. So if the legal services are provided to a business entity whose aggregate turnover in the preceding financial year does not exceed the threshold limit, then it is exempt under GST. If you remember that exemption, if you know, you know, right? So this is exempt under GST actually. Okay. So if you are not able to recollect, please check the legal services exemptions once. So here, direct selling agent services under Amaze Tours. Who shall pay GST? Direct selling agent, all in one will pay. Amaze Tours, Amaze will pay. Okay. All in one and Amaze should be the answer. Option B, all in one and Amaze. For security services, sir, in Private Limited, ABC Private Limited will pay, PSR, all in one will pay. So ABC and all in one will be the answer. Option C. And representational services availed from PB and Co, as we have discussed, exempt from GST. A simple case study. So now coming to case scenario number 16, if you see. So first the MCQs, small case study again. So they're asking you the value of supply for administrative and back office support services provided in August by the head office to its branch office in Kerala. Next, place of supply for services by Bright Ads LLP to Welcome Group, and place of supply for Mr. Kapoor to Bright Ads. Now if you see, so this is a company called Welcome Group Private Limited, and they are providing hospitality and advertising services. Head office in Maharashtra, having various branches across India, and all the head office and branches are registered under GST. Head office is providing administrative and back office support services in the month of August to branch office. On this only the MCQ is there, in Kerala, using the services of employees working at the head office. While issuing the tax invoice to the branch office, the head office did not include the salary cost of the employees involved in providing such service. Branch office is eligible for full ITC. Now, if you see the MCQ here, sir, what should be the value? The open market value of the said services plus salary cost of employees not required. 90% not required. Nil, the value declared. So, if you remember, sir, if there is a clarification, if the head office is providing services to the branch office and in that cost of the employees of head office is not included, and however branch office is eligible for full ITC, na, whatever the tax invoice given, that itself will be taken as the value. So, no need to worry. So, that is the answer here, a simple one. Next, coming to the next one. In October, WGPL, that is Welcome Group, has entered into contract with Bright Ads from Gujarat for displaying its ad on hoardings in an award event in a convention center, Bhopal, Madhya Pradesh. So in Bhopal, Madhya Pradesh, some award function is happening in a convention center. During that event on that particular convention center, they want to advertise their thing, their brand. So they are approaching Bright Ads. And the terrace of the hotel located near the convention center on which hoardings are to be displayed is taken on rent by Bright Ads LLP. Similar type of case we have also seen in some previous case study also from Mr. Kapoor, unregistered, Delhi. Now, if you see this entire scene, Mr. Kapoor is giving it on rent, the hoarding, to Bright Ads. So, because this is rent, place of supply will be the location of that hoarding, the immobile property. Bhopal, Madhya Pradesh will be place of supply. Now, Bright Ads is providing advertising services to WGPL. So, 12 subsection 2 general rule will come into picture, where the recipient is WGPL, is registered, head office Mumbai, Maharashtra. That will be the place of supply. So, if you take place of supply for Bright Ads services to Welcome Group, Mumbai, Maharashtra will be the place of supply because Welcome Group is registered their head office. Place of supply for Kapoor to Bright Ads, the location of the immobile property, that is Bhopal, Madhya Pradesh, will be the place of supply. So that is the answer. So coming to case scenario number 17, again a small case study, but quite interesting, like a different concept than other than what we have discussed so long. So the total amount, determine the total amount to be added to the output tax liability as per section 143. 143, okay. So job work related one. Ignore the different points of time when the amount is to be added to the output tax liability. Okay. What is the pre-deposit for an appeal before GST appellate tribunal, not appellate authority? Last date upon which the appeal with GST appellate tribunal has to be filed. That's all, only 3 MCQs. Right. Let us go with the case study. This is a story of Venue Automobiles Private Limited, registered in Delhi, which is into manufacturing automobiles, auto accessories across India. Plant is in Indore, Madhya Pradesh. Financial year 23-24, they have purchased various raw materials and sent the same for painting and plating it to a registered job worker called Apex Surface Coaters Private Limited. These raw materials are sent directly from place of business of the supplier to the premises of job worker. So this Venue Automobiles Private Limited has also availed ITC on that, and these are the following transactions. Now, if you see, they have given value of goods sent, ITC on such thing, date of purchase of goods, date of receipt of goods by Apex Surface Coaters, and date of goods received back from Apex. See, generally, within 1 year you should have received the goods, otherwise they are deemed to be supplied, and you should pay that tax along with interest. Okay. So here, if you see, these dates are not relevant for us. These are the dates which we have to focus. 15/7/23 and 12/7/24. Within 1 year it has received. 27/9, 13/10 not received. 25/12, 16/8 not received. Different year actually altogether. 25/1, 23/1 is received. 26/2, 28/2 not received 1 year. So these taxes are the things which has to be paid back. That is, ITC has to be reversed along with interest. So 18% per annum. So if you see, 24,000 plus 96,000, 1,20,000, 1,20,000 plus 42, 1,62,000. So 1,62,000 plus 18% interest. This is the correct answer. Simple one. Next. Further, in the month of May 2025, department has conducted assessment of the returns filed by Venue Automobiles Private Limited, and during that assessment, proper officer has observed certain irregularities and has passed an adjudicating order with a demand of 1,200 crores only. Okay, the order was issued on 23rd July, communicated to Venue Automobiles on 28th July, and the same has been appealed before appellate authority on 30th July. The appellate authority passed the order demanding the GST 1,200 crores, perfectly correct only, on 25th August. The same has been communicated to Venue Automobiles on 29th August. This fellow wants to file an appeal now with the against the order of the appellate authority, and they also want to admit the liability of 100 crores. Out of 1,200 crores, 100 crores will accept, sir, but wishes to litigate the balance demand amount and intends to file an appeal with GST appellate tribunal. So he has to deposit 100 crores first of all, plus What is in dispute now? 1100 crore. On that 10% he has to deposit. That is 110 crores. Correct? So total 210 crores he has to go for pre-deposit. Mm, 1 second. Wishes to file an appeal. Okay, the company admits the liability of 100 crores, but wishes to litigate the demand amount and intends to file. Okay, so this is the pre-deposit he has to make. He has to pay that 100 crores and he has to go for a pre-deposit. The total amount of pre-deposit is required to be paid for filing appeal before. So that should be 110 crores. The answer, the question should be even more clear actually here. 1 second. Sorry, sorry, sorry. Yes, yes. My mistake. Yeah, 10% or 40 crores. That is 20 crore plus 20 crore, correct? Whichever is less. So maximum 40 crores, correct? Side effects of recording late night. I'm extremely sorry. Yes, 10% of the disputed tax amount or 40 crores, correct, whichever is less. So maximum 40 crores. So yes, 100 crore plus 40 crores, so 140 crores we have to deposit. Yes, my mistake, my mistake. Sorry, sorry, sorry. So yes, as a student, hope you don't do these mistakes in exam. Now now you'll be thinking, sir, as a faculty you're only doing some mistake, then as a student we don't do fine. So I'm recording all these MCQ case studies from morning. I'm in recording studio. So literally, what? So out of mind, I guess. So I'm extremely sorry for that. Now, last date up to which this Venue Automobiles has to file the appeal with GST Appellate Tribunal. So you should appeal. You can appeal within 3 months from the date of communication of the order of appeal with you. So where is that? Communicated on 29th August. So from that 3 months, 29th August means 29th September, October, November. 29th November will be the deadline. So 29th November. So that is the answer for you. So yes, 1,62,000 plus 18%, and yes, 140 crores. The place where I did mistake, and 29th November. So with this, we are done with case scenario number 17. Let us move on to case scenario 18. So coming to case scenario number 18. So again, not a routine case scenario regarding the different concepts, show cause notice, penalties, all that stuff. A very good one, but a very small one. What is the last date to issue show cause notice by the proper officer on amount of tax short paid? And what would be your answer if it is the amount is short paid because of fraud? And as per section 74 here now, whether it is fraud or not, bona fide mistake. The show cause notice time limit is same 42 months from the due date of filing annual return of that relevant financial year to which this belongs to. Amount of penalty payable on payment of tax 1 lakh on the basis of its own ascertainment along with applicable interest. Okay, so on their own ascertainment they are paying tax. Let us see the question, then we'll get better clarity. Who is liable to pay GST on sale of goods by Malhotra Sons in terms of section 86 in case GST on said supply remains unpaid? Okay, we have to see the question for this also. Maximum penalty on can be imposed, that can be imposed on Sudarshan Chaturvedi, each under CGST, SGST. That also you'll understand only when we see the question. Now coming to the question here. Opulenza Limited registered in Madhya Pradesh, supplying taxable goods, and they are regularly complying with statutory obligation. All that story is there. For financial year 24-25, filed all GST returns within the prescribed time limits. In the course of scrutiny conducted in August 2025, it has been identified by the proper officer they have inadvertent short payment of tax amounting to total CGST SGST 4,60,000 for the month of October 2024, and this is a bona fide error. And please understand, this is regarding the short payment they have as show cause notice. See, the point is, this belongs to October 2024 month, means this comes under financial year 24-25, and for this annual return due date is 31st December 2025. So show cause notice time limit is 42 months from the due date of filing annual return. So it is 30th June 2029 will be the due date for issuing the show cause notice, the last date for issuing show cause notice, 30th June. And even in case of fraud also, the answer should be the same. Okay, right. Now Before issuance of show cause notice by the proper officer, Opulenza has paid that 1 lakh on the basis of its own ascertainment along with applicable interest and penalty if any, and informed the proper officer in writing of such payment. Please understand, if any short payment of tax has happened and on your own ascertainment, if you are making the payment and informing the same thing to the proper officer and show cause notice not yet has been issued, in that case show cause notice will not be issued and hence penalty also will not be charged, provided you have paid the tax and applicable interest on that. Okay, so that is what the point. Next, in the ordinary course of its business operations, 10th October 2025, Opulenza Limited engages Malhotra Sons as an agent to sell goods on its behalf. Acting in such capacity, Malhotra and Sons sold goods to Bravion Associates on 25th October 2025 on behalf of Opulenza Limited. Okay, so they are hiring an agent Malhotra Sons to sell the goods, and when the goods are sold on behalf of some principal, so goods are sold or received by the principal agent on behalf of the principal. So if GST is not paid, obviously principal and agent are jointly and severally liable. So in this case, Opulenza Limited and Malhotra Sons are jointly and severally liable if GST remains unpaid on the transaction. Okay, next. Subsequently, in Jan 2026, in connection with separate inquiry initiated against Opulenza Limited, Sudarshan Chaturvedi, the Chief Executive Officer, was issued a summon to appear in person and produce the books of accounts of Opulenza Limited for the purpose of inquiry. Okay, so this fellow has been asked to come and appear in person. So he has been issued summons. So what is the maximum penalty we can impose on him under each head? 25,000 plus 25,000. So that is what the penalty. So that is case scenario number 18 for you. A good case study rather than a routine type. This is different. So go through this properly. Okay, fine, because you do all the other things properly, but these type of show cause notices, penalties, etc., these are the areas where generally students will do mistakes. So that way, take this properly, neatly, sincerely. Okay, let us move on to case scenario number 19. So case scenario number 19 actually here. So case scenario number 19, if you see the questions: cancellation of regular registration in Uttar Pradesh, last date of filing annual return. Last date of filing annual return, you know, this 3 months from the date of cancellation or order of cancellation, whichever is later. Next, which of the following statement is correct with respect to final return to be filed upon cancellation of ISD registration? For ISD registration cancellation, final return itself is not required, so no final return is required to be filed. Core value traders is entitled to claim ITC in respect of invoices issued in Feb and March of the preceding financial year. The return for the month of September furnished up to. Okay, this we have to go through the case study here. Now, so this is the story of core value traders supplying taxable goods. Head office in Uttar Pradesh, branches in Rajasthan, Bihar, and Uttar Pradesh, Rajasthan, Bihar. All the places they have taken registration. In addition to that, they have also taken ISD registration in Uttar Pradesh. With effect from 1st September of the current financial year, regular GST registration in Uttar Pradesh cancelled retrospectively. Cancellation order on 15th September. Okay, so if you see, there is something regarding final return, correct? So 15th September is, sorry, 15th September is the order has been passed with retrospective effect. That means effectively it has cancelled from before, but order of cancellation is given 15th September. From that 3 months, 15th October, November, December. Within 15th December, they have to file the final return. Okay. The supplier has not availed ITC on certain eligible invoices of Feb and March in the preceding financial year. And yes, as they told here, in there is a question regarding the invoices issued in Feb and March have not taken ITC on that, but registration has been cancelled. And interestingly, ISD registration also cancelled. That information has been given, and regarding that MCQ also we have answered no need to go for final return. Later on, he has filed an application for revocation of cancellation of registration, and that has been granted by proper officer on 15th December. Now, if you see, 15th September, his registration has been cancelled, and it has been revoked on 15th December. But the time limit to take ITC on Feb and March invoices will be 30th November or actual date of filing annual return, whichever is earlier. Annual return has been filed on 31st December. So 31st December, if you take hmm, 30th November or 31st December, which is earlier? Which is earlier? So 30th November is earlier. Hope you are able to understand. And 15th December, you got the revocation order. That means on the date of grant of revocation order, your time limit to take ITC has been over. So here 16 subsection 6 will come into picture. It will say, sir, 30th November or when this has been revoked, 15th December. 30th November or 30 days from the date of revocation, whichever is later. So 30th November and 30 days from the date of revocation. Revocation has been given on 15th December. So 15th December, 30 days means in December 15 days over, still 16 more days are there, plus 14 days in January. So 14th Jan we can take. 14th Jan we take, which is later. This 14th Jan is later. 30th November or 14th Jan is later. Hope you are understanding this regarding 16 subsection 6. So 14th Jan should be the answer. Within that you can take ITC. Okay, with this we are done with 19th MCQ also. Remaining information is not required also for us. If you see, mm, that is what the firm wishes to file the GST 3 of September on 21st December and wants to claim ITC on Feb and March invoices of the preceding financial year. Yes, you can claim that. The deadline is 14th Jan. Okay, so simple one, but different one again. Now coming to next case scenario number 20. So coming to the case scenario here, actually 20. You see, mm, this is a simple MCQ case study based on place of supply. They're asking place of supply services provided by Swar Sadhana Private Limited for admission to music concert and tax payable on said service. Next, place of supply for services provided by Supriya Private Limited to Swar Sadhana, and what is the tax payable on that? And again, place of supply of services provided by Hotel Dhamdam to Supriya Private Limited and tax payable on that. So place of supply and tax payable, place of supply, tax payable on that. That is what the question here. So now, sir, this Swar Sadhana Private Limited is registered in Ludhiana, Punjab, organizing musical events, which is owned and promoted by Mr. Hariprasad Tiwari, and they are decided to go live concerts and all in the name of Hariprasad Tiwari Music Concert at Gurugram, Haryana. Gurugram, Haryana. Okay, fine. Next. So now for this, they have entered into a contractual agreement with Supriya Private Limited Event Management, which is registered in Delhi. And they have agreed to provide this event management services, menu booking, logistic, all these things, on ground arrangements for 10 lakh rupees. And now, event management services provided to a registered person, the registered person's location itself will be the place of supply. So, Supriya Private Limited from Delhi providing services to for Sadhana Private Limited. So place of supply is Punjab and value of supply is 10 lakhs. On this, GST is payable, IGST obviously. So Supriya to for Sadhana, Punjab is the place of supply. So here in the options Punjab, this is option only B is the available. So obviously that is the option. On that IGST should be charged. With respect to that, Supriya Private Limited booked lawn in the hotels of Dum, Gurgaon, Haryana, for which they have charged 4 lakh lump sum. Hotels, always it is like intrastate supply. Place of supply will be that place where the hotel is located. So, place of supply Haryana, 4 lakhs is the value. On that, CGST, SGST will come into picture. And if you see in these options, option C is the only place where they have given CGST, SGST. That way also you can identify the answer. Next. Swarsadhana Private Limited fixes the entry fees 5,000 per person. Total 400 tickets sold. Gross ticket collections 20 lakhs. Okay. And tax rates CGST, SGST, AGST 18%. So for tickets, entry fees to the ticket. So place of supply will be obviously Haryana here. And location of the supply Swarsadhana is Punjab. So on 20 lakhs IGST will come into picture. Place of supply is Haryana. So place of supply Haryana and IGST 3,60,000 will come into picture because location of supply, that is for Sadhana, is registered in Punjab. Okay, so that is the answer. Yes. C, B, and C. right? That is what the point. Now, coming to case scenario number 21. Guys, here the interesting part is this case scenario from case scenario number 21. 21 to 54 is nothing but same old case scenarios which have been already posted by me. So the same video I am attaching here, that's all. So here case scenario 21 is in old case scenario booklet. It is case scenario number 1. Case scenario 22, case scenario number 2 there. So the same video I am attaching here, so you will watch that and everything pin to pin, same, nothing to worry. Okay, so till 54 case scenario. So here 21 to 54, there it is 34. In old booklet there were 34 case scenarios. Here 21 to 54 ditto, same pin to pin, same case scenario. So I am attaching that video, please watch that now. So the key adjustments in first case study, if you see the first question here, what they have asked is nothing but the total GST liability net of ITC paid through GST portal. There are two things. There are the important thing here is, sir, what is the GST paid in GST through GST portal? In this question, there is import of goods. The important catch is, sir, you are importing goods, and when you import the goods, you will pay GST when you are importing the basic customs duty and IGST. So customs duty you will pay, no, right? You will not pay that through GST portal. So that you should be careful here. You are importing goods, on that GST is not paid, IGST you are paying, that IGST is not paid through GST portal. So that amount you should not consider. That is very important thing here in question number 1. Second one, with respect to second question, they have asked you what is gross GST liability without any adjustment of ITC. Here the important catch what they are trying to test is the gross GST liability. When they are saying gross GST liability without using ITC, sir, your gross GST liability will come on your outward supplies covered under forward charge, on that you are liable to pay GST, and inward supplies covered under reverse charge, that is also coming under your gross liability. So when they ask gross GST liability, and one more important thing is, sir, they're asking only gross IGST liability, not CGST, SGST. That is not a big thing. There you should be careful while reading the question. But very important point is gross liability. When they ask you gross liability without any adjustment of ITC, what they are trying to test? They are trying to test, sir, you have a liability on your sales forward charge, and also you have a liability on your purchases which are covered under reverse charge. Both things you should consider and you should answer the question. That is another catch here in second question. Next, the third question. The third question is, sir, you are taking hotel booking services and they are asking you on that invoice like 1 lakh rupees, all this stuff, sir, whether how much amount you can take ITC, all this stuff. In this, they have spoken something like reimbursement from employees, etc., like that. Employees are staying in hotel and hotel expenses are paid, and that is reimbursed to the employees, and the invoice is given in the name of the company, all that. But please understand, this company is located actually in a different state. The hotel is in different state. You know, place of supply provision says immovable property. Sir, location of the immovable property itself will be the place of supply. That means, imagine here in Gujarat the company is there, in Maharashtra the hotel is there. Hotel will charge CGST plus Maharashtra state GST. For that, the Gujarat company cannot take ITC. So ITC itself will not be available in this case. This is one thing which they are testing your place of supply knowledge also. So you have to be careful in such type of cases. Next one, the remaining one, small one, event organization. So place of supply, what will be the place of supply? If the recipient is registered, no matter whether event is happening in India or abroad, sir, the place of supply will be the location of the recipient where he is registered. So it will be Gujarat only. Okay. So that way, these are the small things here in this particular first case study. So now the case scenario 2. In this case scenario 2, see, first of all, there is Doodle Incorporation located outside India, and there is a subsidiary Doodle India which is incorporated in India and registered under GST also. Now in this question, the key takeaways are nothing but, see, first question they have asked you, what is the output tax liability? See, there are two companies here, one is outside India, one is inside India. They have given what and all activities done by these two entities. So both of them has some liabilities, all that stuff. So here they are asking output tax liability without any adjustment of ITC, if any, of Doodle India for the month of January. Here very important point is the output tax liability. If you see in case study 1 when we have discussed, sir, the case study 1, in that they have asked gross liability. When they're asking gross liability on outward supplies, inward supplies, both the cases, what is your liability, you should calculate. That means RCM also should be added. But here they're asking output tax liability. That means you should only see on sales. That is very important point here, which you may miss out. So please be careful. This is one thing. Next one. So the next one is, because both are registered in different countries. See, the another important point we should remember is both are registered in different countries. That means they are not mere establishment of same entity. So whatever is happening between them is properly treated as export. That means if this fellow is doing something to this company outside India, that will qualify as an export. And in the question, there are some exports given, and they will say the value of exports. The value of exports will be cost plus 10%, cost plus 20%, like that they have given. First of all, they are located in different countries, registered in different countries. So whatever is done from this Indian company to that foreign company, they are not mere establishments of same entity. So they are not distinct persons just like that. They are different establishments altogether. We will call it as export of service. We will call it as export of service as per the definition of export of service. So here the important thing is they have given take value as cost plus 10%, cost plus 20%. They have given cost also. In the question, you should not definitely directly jump into the answer like, okay, cost is this much plus 10% is the value. The very important tricky point what they have given here is, sir, they said again, Doodle India, whatever it has done through furnishing the LUT without payment of IGST. So all the exports done by Doodle India are without payment of tax. That means here for these exports made by Doodle India, GST liability will not come into picture. So whatever the information they give regarding the cost plus 10%, cost plus 20% will not be of any use, will not at all be useful in the question, just to confuse you. That you should understand. Next, the third tricky point here is, sir, here whatever the transactions are happening, Doodle Incorporation and Doodle India are working on principal to principal basis. There is no principal and agent relationship. They are working on principal to principal basis. So this is being tested on latest actually amendment or a clarification. So the place of supply shall be determined as per 13 subsection 2, not as per 13 subsection 8. This you should be careful. They are working on principal to principal basis, not as principal and agent. So place of supply will be as per 13 subsection 2, not 13 subsection 8. There is another thing. And one more important thing is import of OIDR services. If you see OIDR services, see, Doodle Incorporation is providing OIDR services to non-taxable online recipients also in the question, and also to this Doodle India. See, if you remember, OIDR services provided to non-taxable online recipient, it comes under forward charge mechanism. So Doodle Incorporation is liable to pay GST on that. But if it is provided to a person registered in India, then RCM will come into picture. So on that OIDR services, this Doodle India is liable to pay GST under RCM, and this can take ITC of that. So in the question they have asked the liability of Doodle Incorporation. Doodle Incorporation liability will come only for supply of OIDR services made to non-taxable online recipients, which comes under forward charge. For that, Doodle Incorporation outside India has to pay GST. Okay, that you should not forget. Please be careful here. OIDR services are provided to non-taxable online recipient also, as well as registered fellow also. To non-taxable online recipient, it is taxable under forward charge. So Doodle Incorporation outside India, there is liable to pay GST. For registered recipient, RCM will come into picture. So the person in India will be liable to pay GST. So please be careful with that. There is another key adjustment here in this question. Next, so the questions, that is what we have discussed. So this one also we have discussed, this OIDR services, RCM, and Doodle Incorporation. What is the GST payable by that? Doodle Incorporation is outside India, no? I told you, no. So OIDR services provided to NTOR, that alone will be taxed. Next, ITC for Doodle India. When ITC for Doodle India you are saying, sir, you should also take RCM supplies are there. RCM supplies received, on that ITC you can take, that you should consider. Okay, that is what with respect to case study number 2, key adjustments. So in case study number 3, see, this is something like Abhivyakti Private Limited, which is engaged in supply of food products, all that stuff, from West Bengal. What are the key points what I have observed in this case study? Now, please understand. Obviously, you know, subsidy linked to the price. If it is given by the government, you should ignore that. You should not add it to the value of supply. They have tested on that. And next, the interesting part is this. Sir, the company is giving staff quarters, the residential quarters for its employees, and collecting rent from the employees. Sir, when they are collecting rent from the employees, see, understand, we are allowing somebody to use the residential property for residential purpose. Renting of the residential building for use as residence, it is exempt under GST. Even though company is renting the residential properties for the employees, it is for residential purpose only they are renting, and they are collecting rent from their own employees, is exempt under GST. Remember that carefully. Next, supply of electricity is exempt from GST. That is another thing you should understand. Next, interest. See, interest portion, always remember, interest in GST will come in two cases. One is, sir, Because of late payment, you are paying interest. That will be added to the value of supply and it will be taxable. And the other case is you are going for loans, advances or deposits. So extending the loans, advances or deposit for which you are earning interest income. That is exempt under GST. Okay, please be careful with this. Next, this is something which I actually liked. Goods transport operator is providing services of transporting the goods. Goods transport operator is not GTA. Please understand. GTA is different. Goods transport operator is different. So, transportation of goods by road is exempt except GTA and courier agency. Only GTA and courier agency is taxable. Remaining any fellow is exempt. So, be careful with the word goods transport operator. If you see, that is not a GTA, so exempt under GST. And they are also given individual lorry truck driver who is not a GTA, that is also exempt under GST. And another interesting thing is there is an MCQ they have tested here. Minor breach, on a concept of penalty for minor breach. The penalty for minor breach you will not be imposing. But minor breach means where the amount involved is less than 5,000. If it is equal to 5,000, it is not a minor breach and you can happily levy penalty of 5,000 rupees. Okay, so that is what the concept. Okay, so with this we have covered key adjustments or points with respect to case study number 3. So if you see in case study number 4 here, this is regarding a person by name Ashok who is proprietor of Office Link Enterprises from Kolkata, that is West Bengal. What are the key points, key adjustments in this? Now see, not that great complicated MCQ actually. So there are very like only 4 key points. One is this fellow is taking here voluntary registration, and hence because he is taking voluntary registration, whatever the inputs lying in stock, immediately preceding date of grant of registration certificate. Okay, on that he can take ITC, only the inputs, ITC on inputs. And legal fees here, please understand, whenever you see legal fees, automatically your mind thinks of RCM. But legal services provided by advocates, all these people, sir, legal services to a business entity in taxable territory whose aggregate turnover is not exceeding the threshold limit. That means in our discussion in class, we would have called a small bet. That means for them, if you are providing for business entities whose aggregate turnover is not exceeding the threshold limit, who are not even liable for registration, for such business entities, if you provide, that is exempt under GST, so no RCM, nothing. So whenever you see legal fees, it is not straight away RCM. Please be careful. Next, see, this fellow has rented a house to a person who is working as an employee in a bank. The rent is paid by the bank. That means I am giving my house on rent to you, but the rent is paid by your company, by your boss. That means here, even though I am renting the residential property, this is not to the person for residential purpose. The company is paying the rent, so it will be taken as official purpose, and hence it will be taxable under GST. RCM or FCM, you should see if the recipient is registered, RCM; if the recipient is unregistered, FCM. But understand, if the rent of any employee is paid by the employer, the company, to the owner, then it is not personal purpose, it is official purpose, taxable. Next, one more time we are testing this hotel rent, where you are going to a different state, staying there, taking a room in the hotel and staying there, paying the room charges, and you pay CGST, SGST in that state. So here, because of place of supply, all that, here in this state you are in a different state, so you cannot take ITC. Technically ITC is not allowed. That is what another adjustment. So this is what with respect to case study number 4. So the next one, case study scenario 5. Here there is a company called XYZ Limited which is registered in Rajasthan. He is doing two businesses. One is GTA business and also some other business of like what, installing and fabricating the vehicles. Okay, so if you give the chassis, they will just make it like a proper vehicle and will give it to you. So they are doing two businesses. Now what are the key points in this particular case study? Now see, first of all, GTA, if they give any time in the question, GTA not exercised the option to pay tax. That means GTA is not opting for FCM. That means what is the general rule? RCM. Okay, whenever you see the word GTA not exercised the option to pay tax, means yes, this is an RCM transaction. GTA is not paying tax under FCM. That is what the point. Okay, now sir, when any person is doing a business, one is GTA and the next is others. For GTA business, obviously if it is under RCM, whatever the purchases made for that GTA business, you cannot take ITC. But for other businesses which are coming under FCM, for that particular business, whatever you purchase, you can take ITC. This you keep in mind. Okay, right. That is another point in this particular case study. And this is very, very important one. Always remember, that is, suppose you are sending some goods for repair to a place outside India. You are sending the goods to a place outside India for repair, and the goods will get repaired and will come back to India. Now you are taking repair services from a person located outside India, and because of section 13 subsection 3 of IGST Act, place of supply also will become outside India. Sir, when location of supply is outside India, place of supply is also outside India, then obviously what will happen? There is no GST and you cannot take ITC. So GST implication itself will not be there. So here please be careful with this. That is what the key points from this particular case study number 5. So the next case study, if you see case scenario 6, a small case scenario, not that complications, but I have identified two key points here in this. One is, see, when you're doing business, you have two branches. One is in DTA and the other is in special economic zone. Sir, in DTA, it is doing 4.2 crore turnover, and the special economic zone unit, it is doing 2 crore turnover in the preceding financial year. Imagine. So put together, what is the aggregate turnover? Aggregate turnover is 6.2 crores. It exceeds 5 crores. That means e-invoice provisions are applicable. E-invoice provisions are applicable only for DTA unit, but not for the supplies made from SEZ unit. This you should be careful. Okay, you know, e-invoice provisions are relaxed for the unit located in SEZ. But for SEZ developer, e-invoice provisions are applicable. Remember that also. Next, the another point what I have identified is nothing but, sir, you are not displaying your GST certificate at the prominent place, or your GST IN is not displayed in the, not mentioned in the name board. So is it a violation? Yes, it is a violation, but the penalty for that is not mentioned anywhere in the law. So the general penalty under section 125, which may extend up to 25,000, 25,000 CGST, SGST, that is 50,000. This is not flat, it may extend up to. In the options, they have given only 5,000, 10,000, 25,000 and nil. You can select 25,000 as the answer. Okay, so these are the two tricky adjustments which I have found out in this case scenario number 6. The next one is case scenario number 7. Actually, there are no that tricky adjustments or etc etc. But this case scenario 7 is purely regarding rule 43, the common use of capital goods for both taxable as well as exempted purpose. You can try it on your own. Easy one, not that difficult. Rule 43, if you have studied, you can easily crack this. No tricky adjustments, nothing in case scenario number 7. So the next one, if you see the case scenario number 8, not much nothing that greatly technical, all the stuff. So no need to worry of that. Regarding case scenario 8, no tricky adjustments, nothing. Case scenario number 9. If you come to case scenario number 9, please understand here, this is not that great tricky, but I have one point to discuss with you. And this point is also regarding, you are making some purchases and sales which are intrastate, interstate, and it also includes taxable and exempt. So some common purchases which are used for both taxable, exempt, kind of rule 42, 43, one MCQ is there. Apart from that, remaining MCQs are based on blocked credit, etc etc. Simple MCQ only. Simple case scenario only. One interesting point is, they have asked you to calculate value of exempt supplies for the purpose of reversal of ITC under section 17 subsection 3. When you are calculating value of exempt supplies, sir, here securities, when you supply, sale of securities are also treated as exempt supplies, because exempt supply includes non-taxable supply. So sale of securities also taken as exempt supply, and the value will be 1% of the sale price. 1% of the sale price. So when you are calculating exempt supplies for the purpose of reversal of ITC under 17 subsection 3, then if securities are given whatever the sale value, from that 1% you take and treat it as value and add it to the exempt supplies. I repeat, suppose if you are selling securities for 1 crore, 1% will be the value. So 1 lakh you should add here for exempt supplies. That is what we have to take care. So that is with respect to case scenario number 9. Now let us move on to case scenario number 10. So if you see the next one, case scenario number 10, see here the small 2 points actually here what I have observed. See, nothing but there is a person by name Mr. Venkat, a practicing chartered accountant from Telangana, providing some services. Now here, see in the MCQ, they gave some free services to unrelated persons, free services provided to brother also. The free services provided to unrelated persons, they are not at all a supply, because they don't satisfy the definition of supply, because no consideration, no supply. But in the question, they'll give you market value, open market value, just to confuse you. So it is not at all a supply, so there is no GST implication at all. Just because open market value is given, you should not take open market value as the value of supply. Okay, that is number 1. Number 2, sir, they have provided services, easy one only, not that tricky one. Services provided to brother, brother is a software employee. And they said open market value, the cost is 75,000, but because it is his brother, he is giving 90% discount. That means he is charging only 7,500. Now, what is the value of supply? See, first of all, brother is a software employee and who is not dependent on this fellow. That means brothers are related only when they are wholly or mainly dependent. He is not mainly or wholly dependent. So brother is not a related person. Value of supply will be nothing but whatever the transaction value happening between them, that will be taken as value of supply, because brother is not related. In this case, it is not brother. What if it is son? Sir, son is nothing but the child. Children are always related no matter whether they are dependent or not. So if it is child, automatically we will take open market value as value of supply. In that case, open market value is 75,000. That will be the value of supply. Okay, that is what the point. So with this, we are done with case scenario number 10. So the next one, case scenario number 11. Again, what are the key points here? I think some three key points we can understand from this MCQ. Easy MCQ, but three interesting points. First of all, see, they have mentioned something like penalty lump sum for delayed payment of 60 days here in the question. See, when you look at the penalty, straight away you should not jump into offences and penalties chapter. Penalty is nothing but for delay in payment of consideration. Supplier is charging. That means it is just like interest for late payment. So interest, late fee or penalty by whatever name called if you remember. And they said lump sum 10,000 rupees. What does it mean? The customer has paid only 10,000. But on the GST also has to be paid. But he has given only 10,000 fully. So you should treat that as inclusive of GST and do the reverse calculation. Calculate the GST liability. Okay, this is first one. Next, the second one. See, the interesting point what I have observed in this MCQ is transportation charges. See, I am the person who is doing business here. And see, my old customer is coming and asking, Vishnu sir, I have purchased goods from some other person. I have that goods. Can you transport these goods to my location? I said, my old customer, okay, I will do that. So what is happening? I am transporting the goods of my old customer, which he purchased from some different fellow. That means I am providing transportation services. Am I a GTA first of all? I am not at all a GTA. In the question, they have clearly mentioned not issued any consignment note. That means I am not a GTA, so those services are exempt. Suppose if I am also doing GTA services, sir, I am issuing consignment note, then it is taxable. RCM, FCM, we have to see. But I am only selling the goods and I am only incurring transportation charges, incidental expenses, recovering from my customer, then it will be added to the value of supply. You are aware of it. The interesting part here in this question is somebody else sold the goods and my old customer is coming and asking, can you transport this? You have a lorry, no? I am transporting, but I am not issuing consignment note. I am not a GTA. Transportation of goods by road by anybody other than GTA and courier agency is exempt under GST. That is the point here. Okay, that you should be careful. Next, there is one more point actually. Free catering services one fellow is providing to his elder brother for the business of elder brother only. Okay, free catering services. Now, in the question they told, sir, there is no open market value available. There is no value of like, kind and quality of the goods available in the market for that services. But we know the cost. They give some cost like 55,000. The moment you see this, what will happen? You will go to valuation rules, cost plus 10%, all that. Okay, the services are provided to his elder brother for his business means elder brother is doing business. Elder brother is not dependent on you. That means elder brother is not a family. He is not a related person as per the related family definition. So straight away, no consideration, not a supply. The cost 55,000 they gave, no, that is just a trap for you so that you will make plus 10% and decide the value and charge GST on that. So please be careful. So these are the key takeaways from this case scenario. So friends, the next case scenario number 12, again, not that great MCQ, simple one only. But what are the key takeaways here are nothing but, see, they have given you various items which are exempt, all the stuff. And also they said this fellow is selling petrol. And there is one question asking what is the value of exempt supplies. Please understand, when you are going for value of exempt supplies, we always focus on, okay, what and all are exempt. But exempt supply definition says exempt supply includes non-taxable supplies also. So whatever the petrol turnover is also there, that also should be added while calculating the value of exempt supplies. So simple, when they're asking value of exempt supplies, not only consider only exempt, exempt supply means which are wholly exempt, which are nil rated, which are even non-taxable supplies, we should add it to the exempt supply definition only. So petrol, non-taxable supplies also should be taken for value of exempt supplies while calculating. Second one, see, transportation of household goods by GTA. When you see this transportation of goods, household goods by GTA, automatically to your mind it comes exempt because for individuals it is providing. But here, this transportation of household goods of an employee who is getting transfer and shifting to a different place, and the transportation charges are incurred by the company. That means GTA is providing services to the company, not to the employee, not to the individuals. You cannot take exemption there. It is taxable. Okay, you should see RCM or FCM accordingly. But in this question, they are stressing on this point only. Just because it is transportation of household goods, you cannot say, sir, it is exempt under GST. Be careful. Next, there is one more point regarding e-way bill generation, the validity of that. E-way bill is generated on Monday, 12:04 a.m. And they said 220 kilometers is the distance. See, 220 kilometers, every 200 kilometers are part there of 1 day validity will be there. So 220 kilometers means 2 days validity. When this e-way bill will expire, anytime when you are calculating the validity of e-way bill, please understand, ignore the day on which e-way bill is generated. Ignore that day. So Monday it is generated, ignore Monday. 2 days validity, Tuesday and Wednesday. Wednesday midnight 12 o'clock it will expire. That means midnight 12 o'clock between Wednesday, Thursday is there. No, that midnight 12 o'clock it will expire. That is what you have to see. So these are the key takeaways from this particular case study. So if you see the next case scenario number 13, very easy case scenario. This is based on purely time of supply, and in value of supply, the discount concept is there. No, based on that, nothing complications, no tricky adjustments, etc., etc. Only thing remember, when advance is received for supply of goods, it is not immediately taxable. Time of supply will not come into picture. But for services, when the advances are received, they are immediately taxable. That difference alone you just remember. Apart from that, case scenario number 13 doesn't have any tricky adjustments. Now, if you see case scenario number 14, see case scenario number 14 is also not that difficult one, but again, some three tricky points I have understood. The tricky points in the sense, when you're reading the MCQ, please be very careful, because sometimes they will ask you what is the correct statement out of the following options. Sometimes they will ask you incorrect. Mostly in the exam tension, you will read incorrect also as correct statement. So please be careful when you are reading the question here. That is one thing I wanted to suggest. Next, another point is, see, when you are calculating aggregate turnover, you are calculating aggregate turnover for the purpose of composition scheme or for the purpose of registration. So these are mainly two areas where you will be computing aggregate turnover. When you are calculating aggregate turnover for the purpose of composition scheme, please ignore the interest income what you are earning by extending loans, advances or deposits. But if you are calculating the aggregate turnover for the purpose of registration, whether you are liable for registration or not, then you add it to the aggregate turnover. So interest income, ignore it for in composition scheme for section 10 purpose. Anything you are doing under section 10, ignore this interest income. But that should not happen in registration case. In registration case, for aggregate turnover, you should add the interest income. That is another important point. Next, the third one is, obviously you will be knowing place of supply one. One fellow is selling to another fellow, that fellow is selling to another fellow, but shipping is done by this fellow. In the question, what has happened now? Sir, Akash is making a sale to Abhijit. There is a sale between Akash and Abhijit. But Abhijit is asking, so Akash is from UP, Abhijit is from Gujarat. But Abhijit is asking to deliver these goods to his customer in, again, UP. So this is build to ship to model between Akash and Abhijit. This is one sale. For this, what you have to do, you should determine place of supply accordingly. So build to ship to model, whoever is giving the instructions, even though delivery is to ABC Private Limited of Uttar Pradesh, who gave the instruction, person in Gujarat. So that will be the place of supply. This is one sale. So you should treat it separately, calculate place of supply accordingly. And Abhijit is selling the goods to ABC Private Limited in Uttar Pradesh. Here, billing by Abhijit is also done to ABC Private Limited. Shipping is also done to ABC Private Limited. Shipping is done by some other person, that's a different story. But Abhijit is only raising invoice. Abhijit is only sending the goods according to ABC Private Limited. So here, movement of goods is involved. Where the movement is, like when movement of goods is involved, what is the place of supply? Where the termination of the goods is happening. So Abhijit is from Gujarat. Goods movement is terminating in Uttar Pradesh. So the place of supply will be Uttar Pradesh. So here also IGST will come into picture. Here also IGST will come into picture. When these three types of characters, three different characters are given and two different supplies are given, please be careful. Take every type of supply separately and calculate the place of supply accordingly. So that is what the key takeaways from this case scenario. So the next one is case scenario number 15. Case scenario number 15 purely regarding e-way and certain points to revise, that's all. Not that great difficult things, but just to revise good points. Number one, see, if you are a warehouse operator, you need not take mandatory registration. You can enjoy the threshold limit for registration, but you should apply for unique enrollment number till you get your registration done. That means once your aggregate turnover exceeds the threshold limit, take registration, then this will lapse. But till then, because you are a warehouse keeper, you are storing the goods of multiple people, you should apply for unique enrollment number. That is important. Next, transporter who is registered in multiple states. Only when he is registered in multiple states, he can apply for something called unique common enrollment number, which is used for like updating part B in the e-way bill, all that stuff. So in multiple states, if you are a transporter registered, then you can go for unique common enrollment number. Okay. Next, Sir, when there is interstate movement of goods, even though the value of consignment value is not exceeding 50,000, you should generate e-way bill. That means consignment value doesn't matter if interstate movement is happening between principal and job worker, not everybody. Some unrelated people, sale is happening, all that stuff, they can enjoy this relaxation. But if it is principal and job worker, interstate transfer, then definitely e-way bill should be generated irrespective of the value of consignment. Next, the last one is nothing but consolidated e-way bill can be generated for multiple e-way bills. Even though multiple e-way bills has multiple validities, still consolidated e-way bill can be generated. These are the key takeaways from this particular case study. If you see next case scenario number 16, I don't see any tricky adjustments apart from, see, if you remember, when you are purchasing the vehicles less than or equal to 13 including driver, you remember that including driver, sir, they are covered under 17 subsection 5 blocked credits, but there are exceptions. Here there is an exception. This fellow is into business of transporting the passengers, all that stuff, passenger transportation, so he can take ITC no matter it is 8%, 9%, 11%, 13%, including driver also, he can happily take ITC. The only thing is you just recollect less than or equal to 13 including driver is a blocked credit, but there are exceptions. Okay, that was the only key point. Apart from that, nothing greatly involved here. And when you are calculating GST liability, when they ask you one more important thing, remember, when they ask you what is the GST payable in cash, sir, when they ask you GST payable in cash, sometimes you will forget rule 86B. So please be careful whether rule 86B will be applicable there or not. You know, monthly the value of taxable supplies are more than 50 lakhs. Obviously, you have to follow rule 86B, at least 1% you should pay in cash. Some questions they will say ignore rule 86B and calculate. Some questions they will not say anything. Then you should see value of taxable supplies in that month. If it is exceeding 50 lakhs taxable supplies, then you should pay 1% at least in cash. That you please try to keep in mind. So apart from that, nothing else that greatly relevant here. Okay, small points, no need to worry. So with this, we are done with case study number 16. Next one, if you see case scenario number 17, again, not that complicated, all that. Some points are there, let us discuss them. So here regarding, see, one point they have tested is regarding how many months you have to maintain your books of accounts any financial year. You know, 72 months from the due date of filing annual return. That is one point tested. And next, one important thing here what I have identified is, see, when they are asking you the question in MCQs, please be careful with the wordings aggregate turnover and taxable turnover. In one MCQ they asked aggregate turnover, in another MCQ they have asked what is taxable turnover. So aggregate turnover includes everything, whatever the supplies you have made, you know the definition, all that stuff. Taxable turnover only the taxable supplies what has been done, that you should be careful. And in this one, the catchy point here is, sir, I am acting as an examiner for the exams conducted by ICAI or ICSI and I am getting revenue. Now, please understand, this is nothing but the supply I am making and this will be added in aggregate turnover. But because I am providing these services to an educational institutions getting any supply with respect to in connection with conducting the exams is exempt under GST. Like for example, you see setting up the question papers, printing the hall tickets or acting as an examiner, all these things. So this is exempt under GST. So that will not come in taxable turnover. So I repeat, acting as an examiner for exams conducted by educational institutions is supply, but it is exempt. That you should be careful. Next, permanent transfer or disposal without consideration to unregistered persons. You know, it is a schedule 1 transaction. Even though it is without consideration, it is supply. And how do you determine the value of supply? As per rules 27, open market value. Okay. So next, interest. This is another important point in this particular case study. Interest calculation. See, when interest is calculated under section 50 for delayed payment of tax, please understand, if there is delay in filing the return, because of the delay in payment of tax is happening, one amendment is also there here. You should pay interest on gross liability minus ITC balance you have minus cash balance lying in e-cash ledger. After that, whatever the remaining amount is there, on that only interest has to be paid. This is very important. Amendment also is there. So I repeat, interest for delay in filing the return, because of that there is delay in payment of tax. Then on what you should pay interest under section 50 is gross liability you take from that. I repeat, delay in payment of tax because delay in filing return, gross liability minus ITC balance lying in credit ledger and minus cash balance lying in cash ledger. After that, whatever the balance amount is there, on that only you should calculate interest. In any other case, interest will come on gross liability. That you please be careful. These are the key takeaways from this particular case scenario. Now coming to case scenario number 18, if you see in this, what are the key takeaways are nothing but, see, first of all, they've asked a question: GST payable after set off of TDS credit. When they use this word after set off of TDS credit, please be careful. Yes, you should calculate your gross GST liability minus ITC and minus TDS TCS, whatever the amount is reflected in your cash ledger. Of course, TDS TCS, whatever has been deducted or collected from you, that will come and reflect in your cash ledger. On that, whatever, after deducting that, whatever balance actually payable by you in cash, that you should be selecting as the correct answer. This is first point. Next one, see, one more thing, you're coming out of composition scheme and started to pay tax under normal scheme now. 18 subsection 1 clause C will give you an advantage, that is, you can take ITC on inputs which are lying in stock, work in progress, finished goods, all that stuff, immediately preceding day of uh, completing your composition scheme, like you are coming out of composition scheme. And also on the capital goods you can take ITC. If you remember, GST paid when you are buying that capital goods minus 5% per quarter, how many quarters you have used fully or partly, that much you have to pay, that you know obviously. Next, point 3 is regarding refund under rule 89 sub rule 4. You know, refund under 89 rule 89 sub rule 4, you can take ITC, accumulated ITC balance, or ITC amount into zero rated turnover divided by adjusted turnover. So not tricky point, but please pause the video, try this on your own and then continue this. So not tricky one, but just because regarding refund, a good one to practice on your own. Okay, just do that simple one, but just because it is refund, I'm asking you to do it on your own. Next, and as I said earlier in the first MCQ, the first point when we are discussing, they have asked you tax liability to be paid in cash, correct? In that also, one more interesting point is they asked it for a period of April to Feb. Now, in the April to Feb period, sir, for some portion, April to June, you are in composition scheme. Later on, you came out of composition scheme and started paying in tax in normal scheme. In that cases, see, when you are in composition scheme, whatever the liability that you cannot use ITC, you should fully pay in cash. So when they ask you to pay, calculate tax liability in cash, this period during composition scheme, whatever the liability, you should take fully. And in normal scheme, you can use ITC, balance all the stuff, and then calculate the liability, cash liability, all that. Okay, so please be careful in the question. For some period when you are in composition scheme and some period normal scheme, please be careful when you are calculating the liability in cash. So these are the key takeaways from this particular case scenario. Right. The next one is case scenario number 19. See here in this, by showing the answer, actually I'll explain this actually based on value of supply. If you have time, try to do it on your own. One good adjustments actually with respect to discount and interest. I'll explain this to you actually. See what they're doing now. They're selling machines to the customer for 40 lakhs, and any machine sold, definitely they will charge 10,000 rupees handling expenses and 1 lakh rupees installation charge. So definitely that 40 lakhs plus 10,000 plus 1 lakh will be the value of supply for sure. Okay, so total 41 lakh 10,000 customer has to pay. And for every sale made, they will also get a 2 lakh subsidy from its holding company, not a government. So price directly linked to the subsidy directly linked to the price. So the total value will become 43 lakh 10,000. But here one more twist in the story is, if customer is promising, sir, I will make payment to you within 15 days, like that, if customer promises enough, they'll give them discount of 2%. 2% of this price of the machine, that is 80,000. So 80,000 they will give discount. Now this will become the value of supply, on that GST will come into picture. Hope you are clear till now. So if customer promises, they'll give discount 2% on the price of the machinery, 40 lakhs. Okay. So this will be the value of supply, and on that GST will be charged. But here the twist in the story is, if customer doesn't pay that within 15 days, then whatever the discount we have given, this 80,000, we will recover this money from the customer, and on this extra GST we are not charging. If you look at the question, in the question they have clearly mentioned, sir, cash discount 2% is given. If customer agrees to pay, agrees, that's all, no need to pay, agrees to pay 15 days, immediately we'll give discount at the time of sale itself. Suppose if he fails, then we will recover the discount given at the time of receiving the payment from the customer. No separate amount of GST is recovered. What does it mean? For 80,000 we are recovering now the discount amount. That what we should do now? We should do reverse calculation. We should assume this is including GST, and we should do reverse calculation and pay GST on this 80,000. Hope it is clear for you. That means let us assume 12% is a GST rate. This way you should calculate and take the value separately and GST separately. You are aware of it. And next important thing is with respect to interest. See, if what they are doing, they are charging a simple interest of 1% per month or part of the month. 1% per month or part of the month. So even for part of the month, this is very important for you. Even for part of the month, they will charge 1% interest. Okay. And again, one more important thing, they said no separate GST is charged. That means whatever interest is received, you should calculate assuming it is including GST and proceed. Okay. And how much interest? 1% they will charge interest. 1% interest they will charge on what? On the total amount due from the customer towards the machinery supplied. Okay, from the date of making supply till the date of payment. So please understand here, if you are not paying within 15 days, they will they will recover the discount 80,000, and also they will charge simple interest 1%. Now here the interesting thing is how much is the amount due from the customer as per our calculation. As per our calculation, amount due from the customer is 41 lakh 10,000 when he is purchasing the machinery. On that 41 lakh 10,000, 1% will come as interest. So that way you should calculate interest also. Okay. So if you see, so 2 months delay, actually what has happened here now, 2 months delay has happened. So 2% interest will come. So 41 lakh 10,000, on that interest is 82,200 and cash discount 80,000. So total 1 lakh 62,200 you are recovering from the customer, and both the cases it is extra GST you are not recovering. So you are assuming both are nothing but including GST and doing the reverse calculation and getting the GST component here. Hope you are clear with this. So one good question with good adjustments with respect to discount given to the customer and interest portion. Okay. So there is one more question actually. Sir, here the company is selling the machine and providing these handling charges, loading charges and installation, all that stuff. All these things, should we call it as composite supply or mixed supply? They are naturally bundled, so obviously we call it as composite supply. So these are the key points from this particular case scenario. So the next one, case scenario number 20, this is mainly on e-commerce transactions here. What are the key takeaways for us, sir? See, when you are reading any question, not only this case scenario, whenever you are reading any question, please be careful. In the question, they will be using one dangerous line. All amounts given above are exclusive of taxes. So this point, whenever it is there, please be careful with that. So whatever the calculations you are doing, into GST rate only you have to charge. You should not assume anything inclusive of GST unless they specify. Okay. Now, sir, another point is new TCS rate, you are aware, 0.5%. Earlier it was 1% TCS, now it is only 0.5%. That is 0.25 plus 0.25 CGST and SGST. Next, the third important takeaway here is cancellation charges from customers. See, when any cancellation charges are charged by anybody from the customers, please understand we are tolerating this. So tolerating an act is also supply of service. If it is a common industry practice, that means we are not punishing them, we are allowing them, yes, to cancel the orders. We are giving an option, but we want some cancellation fees. So that is also supply of service, and hence taxable GST is applicable. Okay. Now if you look at the entire scenario here, e-commerce operator is providing various things. Sir, e-commerce operator is allowing sellers to sell the goods through that e-commerce operator, and TCS comes into picture. But e-commerce operator are selling on their own account from their own website. TCS will not come into picture, that you are aware. And one more thing, the e-commerce operator will charge handling fees, platform fees, etc., from the sellers. That means e-commerce operator is providing some service to the sellers. On that, GST is applicable, and e-commerce operator is liable to pay GST on that because they are providing service here. Not only that, e-commerce operators are also providing the option to cancel for the customers, but they are charging from the customers cancellation charges in this particular question. Cancellation charges they are charging from the customers. As I told you earlier itself in the previous discussion, so it is taxable for the e-commerce operator and they have to pay GST on that. We have already discussed this above. So these are the various possibilities they have tested in this particular case scenario. So the next one is case scenario number 21. Very easy one, but two small points actually I wanted to add on here. One is, see, whenever you collect anything in the name of tax, even though you are not supposed to collect, GST is not applicable, but you are charging, or it is 12%, you are charging 18%. In such cases, whatever has been collected, that you have a responsibility to pay it to the government. So you have to pay it to the government. That means you should add it to your liability. When you are asking what is your liability, you should also add the amount what you have collected, which is not required to be collected. That is one thing which you should remember. Next one, whatever tax wrongly collected and not paid to the government, if you have not paid it to the government, so the government can issue a show cause notice for you. And if you remember, this is section 76 case. Sir, as per section 76, when any amount is collected where not required to be collected, but you have collected in the name of tax and not paid to the government, further show cause notice can be issued without any time limit. There is no time limit for issuing any show cause notice. So these are the interesting points in this case scenario 21. Next, going to case scenario number 22. Sir, what are the interesting things in case scenario number 22 if you ask me? See, first of all, this is regarding transfer of business as a going concern, all the stuff. See, when you are transferring the business, so when the business is transferred and after the transfer of business, the liability has been determined. Let us assume the liability may be determined before the transfer also, after the transfer also. In that case, who is liable to pay the GST, whether the transferor or the transferee? Please understand, when there is transfer of business, liability related to the previous period before the transfer, whether the liability is determined before the transfer itself or even after the transfer, but liability belongs to the previous period. Such liability shall be borne by transferor and transferee jointly and severally under section 85. Okay, that is one interesting point which we should remember. Okay, one revision, quick revision for you. And next, of course, you will be knowing transfer of business as a going concern, either wholly or partly. If you are transferring the business as a going concern, then it is exempt under GST, no GST implication, right? These are the two interesting things from this case scenario. Next, case scenario number 23. Case scenario number 23 also nothing great involved here. 2 points. See, simple. One, you are a publisher, printer. So for a printer, what we are doing, we are going giving the content and asking to print the books, and he is giving to us. Is it supply of goods or services? Sir, when you go with books, pamphlets, brochures, annual reports, leaflets kind of thing, where you give the content, that fellow will print it and give it to us in physical form. Here we are mainly going to him for printing services. So the predominant element is service. So it is treated as supply of service. But in the same case, if it is you are going for envelope covers, letter cards, or printed boxes, tissues, napkins, wallpapers, etc. On that, what see you are going to buy their envelopes, you are going to buy their letter cards or letterheads or printed boxes, tissues, all these napkins. Incidentally, what they are doing, they are printing your logo, company address, etc. etc. Here, the predominant element is supply of goods, hence it is treated as supply of goods itself. Printing is ancillary. Okay, so this is supply of goods, and previous books, brochures, leaflets, all that stuff is supply of service, because there the predominant element is printing service. So this is what from case scenario number 24. And one more thing is there, so case scenario number 23, I guess. Yes, one more thing is there, that is nothing but, see, when there is branch transfer happening within the state from one branch to another branch, please understand, they cannot be called as distinct persons as per section 25 subsection 4 or subsection 5. They will not satisfy the meaning of distinct persons, because there is same registration and two branches are there within the same state. Only one registration, two branches are there. Anything moving between them is nothing but what? Branch transfer only. But branch transfer also, they should satisfy the meaning of distinct persons. If they are not satisfying the meaning of distinct persons, anything happening between them is without consideration. So no consideration, no supply. You cannot invoke schedule 1. So schedule 1 cannot be applied here because they are not distinct persons. Okay, that is what the another interesting point in this particular case scenario. So with this, we are done with case scenario number 23. Let us move on to case scenario number 24. Right, next one is case scenario number 24. See, case scenario number 24 and 25 both are mostly concentrating on time of supply section 14 actually. So toss section 14, change in rate of tax. Change in rate of tax. See, whenever you are calculating section 14, change in rate of tax, time of supply, and first of all, understand this is applicable for both goods as well as services, section 14. What you should see is, see, first of all, there are three things. When there is change in rate of tax, supply you have to see when the supply has happened, the goods or services, the date of payment, the date of invoice you have to check. Between these three dates, any changes has happened, the rate of tax has changed between these three dates, then section 14 will come to picture. Sir, before the change only all these three things over, or after the change after all these three things are over, then section 14 will not come into picture. Now, I'll tell you one simple technique here. See, when you're going through section 14, check where is supply. Supply of goods or services before the change or after the change. Imagine before the change supply is there. Now, before the change, if invoice or payment, any one thing is there, any one only will be present, not both, because all the things are coming before the change. Now, it will not come for section 14. So, either invoice or payment will be there before the change along with the supply. Then what we will take? Whatever is there along with the supply, either invoice or payment, whatever is there, that will be time of supply. No, sir, supply is before the change. Both invoice and payment are after the change. Then date of invoice or date of payment, whichever is earlier, we have to take as time of supply. Same way, opposite scenario. Sir, supply has happened after the change, sir. Invoice also happened after the change. Then invoice will be the date of invoice will be the time of supply. No, 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 sir. Supply has happened after the change, but payment has happened after the change, sir. Payment also happened after the change. Invoice before the change only, sir. Then payment will be the date of payment will be the time of supply. That means supply is happening before or after. Along with that, whoever is there, that will be the time of supply. Both of them are not there, sir. Date of invoice or date of payment happened before change, and whichever is earlier. I will show you in simple words. Here there is change in rate of tax on 10th. This information when you are gathering from the question, you should be careful. Sir, change of rate in tax happened on 10th Jan. Now I will take supply. When supply has happened? 5th January. That is before the change. Invoice 5th January. That is also before the change. Payment after the change. Correct? So supply happened before the change and invoice also before the change. So time of supply will be 5th Jan. And because two things are happening before the change, old rate will come into picture here. Okay, right. Here this is regarding some goods actually in this question. They have asked this. Now the same thing, the same way, remaining points are small points in case scenario 24, nothing to worry. Case scenario 25, again, if you see, change in rate of tax has happened 22nd Feb. I repeat, both this applicable for goods and services. Now, there are three customers have taken the information of supply, payment and invoice, supply, payment and invoice, supply, payment and invoice. What we should see first? We should see when supply has happened. Supply has happened. See, change is 22nd Feb. Supply happened 15th Feb. That means this is before. Payment 13th Feb. This is also before. Invoice not raised till date. That means this will come after. Now you tell me which is time of supply. Along with the supply, whatever is there, that will be the time of supply. So time of supply will be 13th Feb. And because both the things are happening in the previous, before the change, old rate is applicable. Okay. Same way here, sunshine also, you see, change is happening on 22nd Feb. Supply is happening on 28th Feb. That means this is after change. Payment is happening before the change. Invoice is happening after the change. Okay. Supply is also after the change. Invoice is also after the change. So what is time of supply? 28th Feb. New data, old data, two things are happening after the change. So it will be obviously new rate. That is how you have to calculate everywhere. So this is the simplest way of remembering section 14 for you. Okay. So these are the things. Now in case scenario number 25, there is one more interesting thing regarding advanced ruling. Not interesting thing, just a revision for you. You can apply for advanced ruling for time of supply as well as value of supply, for determination of time of supply as well as value of supply. And when the authority for advanced ruling has given an order, that order, if the concerned officer or the jurisdictional officer or even the applicant for advanced ruling itself doesn't like, so they can challenge that order. They can go and file the appeal against the order given by authority for advanced ruling. With whom? With the appellate authority for advanced ruling. So any order passed by the authority for advanced ruling can be appealed by either concerned officer or jurisdictional officer or even the applicant who are aggrieved by the order, that can appeal that order in appellate authority for advanced ruling. Okay, so these are the interesting points till case scenario number 25. Hope it is clear for you all. So if you see, the next case scenario is case scenario number 26, based on educational services. Not at all any like tricky points, all the stuff, general things. Educational related services exempted, the services provided to student, faculty, staff, the composite supply, the principal supplies education. So whatever the incidental things are also exempt under GST. So based on that, one small simple case study based MCQ, not that great one. If you have time, you can just go through that, otherwise not a problem. Next, case scenario number 27. This is regarding air travel agent. In this, there are certain points here. What is that? Now see, when the air travel agent is selling the tickets, he is collecting the basic fare as well as PSF and UDF, passenger service fees, and this user development fees. These airlines are collecting these charges as a pure agent, and it will be given to airport authority, and airport authority will be GST on that. So whatever the PSF and UDF collected by airline agents are not subjected to GST in the hands of airline agents, because he is purely collecting it as an agent, hence not taxable. But for collecting that, he is getting some commission. So here in the question, they have collected 1 lakh rupees including GST as PSF and UDF. See, on PSF and UDF also GST will come, but that will be paid by the airport authority. So airline operator duty is this air travel agent duty is to collect that PSF and UDF and give it to the airport authority. So for giving this, he is getting commission. So here 1 lakh he has collected like that including GST. On that he will get 5% commission including GST. Okay, so that is what the point. Now please understand. Mm, So he will get a commission of 5%. He will get a commission of 5% on the PSF UDF including GST, whatever collected, okay, as collection charges. So 1 lakh he has collected including GST on that. On that 5% he will get commission. That 5,000 will be taxable. That you should be careful. Okay, that is another point. Next, see this Zoom Air, the air travel agent, if any customer, any passenger is cancelling his ticket, they are charging 100% cancellation fees. So that means they are charging 100% cancellation charges, means already they paid 10,000 rupees for the ticket. Imagine now they are cancelling, now they will not give anything refund to the customer. So now because 100% cancellation charges are being charged, and first when you have booked the ticket, it was taxed. Now we are cancelling the ticket. We should return the tax. But for cancellation, I am charging again 100% amount. So again there is tax liability already discharged. That means net impact is zero. So now 100% cancellation charges, total amount you are forfeiting. So whatever the tax paid is proper. So for 100% cancellation charges, already you have paid tax on the same amount while booking. Now on cancellation charges, no GST implication. Okay, that is what I am trying to tell here. Okay, this one you be careful. Next. So here again, Zoom Air, this company, the air travel agent is booking tickets, giving gifts to the employees, booking tickets worth 60,000 in the year. You know, for employees, gift greater than 50,000 per employee per annum, fully taxable. That another point. Next here, um, there was one question. The passengers are registered under GST. Can they take ITC? Here, one point what we should remember is if the passengers are registered, they will take ITC not only on the basic fare. They have purchased the ticket 10,000 rupees. On that, they have paid GST. Not only that, sir, PSF and UDF also they have paid no on the ticket. On that also GST is there. That amount also they can take as ITC. That you remember. Okay, you can avail ITC on the basic fare as well as the GST paid on PSF and UDF. Okay, that one. Next, and there is one more thing regarding sale of online advertisement space. For online advertisement space, that means you are seeing in websites or Instagram, Facebook, all these type of ads, etc. So this online advertisement space we are allowing, that is nothing but OIDR services, obviously. So because it is OIDR services, we should see if at all it is import of service, etc. So this is both the cases, both the supplier and recipient are within India. It is intrastate supply, hence supplier is only liable to pay GST and the recipient can happily avail ITC. Very simple one, nothing to worry. Only thing, remember, online advertisement space is nothing but OIDR services. Here one more last MCQ in this particular case scenario is, see, Zoom Air, these people are selling 1,000 tickets in bulk to Super Trip. So Super Trip bulk, in bulk 1,000 tickets it has purchased, but it was able to sell only 800 tickets and 200 tickets lapsed. Now what will happen, sir? Zoom Air has already sold 1,000 tickets, so they will pay GST on 1,000 tickets, correct? So Zoom Air is liable to pay GST on that 1,000 tickets, but Super Trip can take ITC of it. That ITC they can use for paying GST on 800 tickets. So on 800 tickets only, GST implication will be there. On 200 tickets, no GST. But for paying this GST, they can take ITC of 1,000 tickets, whatever they have purchased. No, that time the ITC they can take. That alone is the point here. So with this, we are done with case scenario number 27 also. So till now, case scenario 20 till case scenario 27, we have got all the key adjustments. Hope you are clear. Now the next one is case scenario number 28 actually. So in case scenario number 28, this is actually related to telecom services mainly. Mm, with respect to that industry, they are testing your knowledge in various things. Here only thing, like first point what I wanted to explain you is regarding, see, there is a company called Infotel. It is providing telecom services to its customers. For the telecom services it is providing to its customers, what it is doing, it is collecting telecom charges as well as it is also collecting subscription charges. Why? Because using the platform of Infotel, these customers are also getting some services from Cloud Zone, like just like using Airtel you are subscribing to Netflix kind of thing. Okay, so these customers are paying subscription charges to Infotel, and Infotel will pay that entire amount to Cloud Zone, not even withholding 1 rupee. Okay, and the Cloud Zone will raise invoice in the name of the customers directly. That means Infotel doesn't have anything to do here between Cloud Zone and customers. Now please understand, Infotel is providing some services to customers and customers need something else that also Infotel is procuring and giving, but consideration Infotel is collecting and giving it to Cloud Zone. That means here, if you understand, Infotel is acting as a pure agent for these customers, the subscribers. Okay, so whatever the subscribers needs, it is getting and giving it to subscribers. Okay, it is not taking any 1 rupee extra, it is not holding any ownership on all the stuff. And of course, Cloud Zone is also directly raising invoice to the subscribers. So in that case, Cloud Zone is acting, providing services to subscribers, and in middle, Infotel is acting as a pure agent, is acting as a pure agent. Whatever required for subscribers, it is collecting and giving. So there is an MCQ here regarding choose the correct answer here. Correct statement, transaction between Infotel, Cloud Zone and subscribing customers. The Infotel is a pure agent, acting as a pure agent for the subscribing customers. Okay, for subscribing customers, what they need, Infotel is making sure they are getting that, and whatever it is collecting, it is paying, not even withholding 1 rupee or not even having any ownership, all the stuff. And Infotel is not supplying anything. Okay, just whatever is needed to the subscribing customer, it is just procuring and giving it to him. So acting as a pure agent for the subscribers. This is one point. Okay, hope it is clear. If you want, you can just pause the video and go through this. I just explained this particular paragraph. Okay, so this is the point. Now next one, here one more interesting thing regarding, we see regarding hotel bookings, no, like intrastate supply will happen CGST, SGST, but you are registered in other state. Same way here, this company is based in Haryana and of course all other different states also. So this company is purchasing towers. Okay, the towers, what they are doing, they are sold by a person from Rajasthan and installed in Rajasthan. So location of supplier is also Rajasthan, place of supply is also Rajasthan, and that fellow is charging CGST plus Rajasthan GST in the invoice given to Haryana. On the Haryana registration, on the Haryana head office, what this fellow is doing, this fellow is raising an invoice with the CGST plus Rajasthan GST. Now that means, can the Haryana office take ITC of this? Obviously no, just like the hotel bookings we see, no, the same way. Okay, right, next. And in the MCQs, when they're asking, they asked you what is the GST payable in cash. Tell me that amount, GST payable in cash, assuming no ITC utilized by it. Excluding ITC, no ITC is there now. What is the GST payable in cash? Sir, you should calculate FCM liability also, RCM liability also, totally put together. What is the GST payable in cash, that you have to calculate and give the answer here, so that you be careful. Next, here while providing telecom services to the customers, the company is also thinking about providing dish antennas and cables to the customers as part and parcel of this supply, and they want to charge a fixed amount, one standard amount called 3000. But here the problem is, dish antennas and cables are subjected to 28% GST, but the telecom services are subjected to 18% GST. So what is the tax treatment? See, providing these dish antennas and cables are nothing but part and parcel of the main supply of telecom service. So these are naturally bundled in the ordinary course of business. So we will call this as composite supply, and entire 3000 will be subjected to the principal supply. What is the principal supply here? The principal supply is telecom service. So 18% will be charged, not 28%. That will be the point. Right. So I think that's all we are done with the adjustments here. So with this, we are done with the case scenario number 28. Right. So now case scenario number 29. If you see in this case scenario number 29, here something related to uh, the area limited in India, and it has its subsidiary company something in abroad also. Regarding that, nothing much information in the question also, no need to worry. So here what has happened is, this company has supplied paper rolls to a school for preparing question papers. Understand, supply of services in relation to conduct of exams is exempt from GST, but supply of goods is taxable. So that one is one interesting point here. Next, bond amount recovered from the outgoing managing director. See, the managing director is breaching the contract, and for that he is making the payment. And we know breach of contract is not an act of like agreement to tolerate something, and we are getting consideration. So it cannot be treated as supply, and hence there is no GST for that. Okay, right. Next one. So they are making supply to a goods to territorial waters, in a place territorial waters, which is 12 nautical miles from Kerala and 15 nautical miles from Tamil Nadu. So obviously we should take the state which is closest, correct, to the territorial waters, that particular location. So place of supply will become Kerala in this case, because it being the closest state. Next, they have spoken something regarding advances. Advances for goods is not immediately taxable, but advances for services are immediately taxable. You know that. Next, there are some computers which are used for business purpose on which no ITC has been taken and they are freely disposed of. Permanent transfer or disposal of business assets on which ITC has been claimed, that alone is supply. If ITC is not taken, no consideration, no supply. So it is not at all a supply. Sir, they give open market value in the question, sir. That open market value in the question is just to confuse you, so you can happily ignore it. Okay, that is another adjustment. Next, some event management is done outside India, and event management is for this company is the event is conducted outside India, Dubai, but still the location of recipient itself will be taken as place of supply. That is Kerala. Okay, it is not Dubai. Even though event is conducted in Dubai, because the recipient is registered in Kerala, place of supply will become Kerala. So these are the points. And one more interesting thing, in one MCQ they have asked, compute the total GST payable on outward supplies. Please be careful, this type of MCQ is actually here. When they specifically mention outward supplies, you should only calculate on sales, not RCM purchases. RCM purchases should not be added. Okay, that is the another thing. So apart from that, yes, we have finished everything. Okay, so with this we are done with case scenario number 29. Let us move on to case scenario number 30. So now in this case scenario number 30, if you see, actually see their company Shreyans Limited is having multiple divisions, that is multiple businesses it is doing. But what it is doing, na, sorry, in one state they are taking only one registration for all the divisions. That means one interesting point what we have to understand here is any transaction between two divisions in the same state, that cannot be called as supply because they are not distinct persons, and no consideration, no supply. Hope you have understood this. So please be careful when you are going through this type of adjustments. Next, one more thing is, sir, within the same divisions again, the distinct person, something is happening without consideration, supply, and payment is to be done within 180 days. Otherwise, reversal of ITC will not come into picture because it is not applicable for Schedule 1 transactions, that you don't forget. Okay, so payment of within 180 days, otherwise recipient should reverse ITC, all that. So that is not applicable for RCM supplies and Schedule 1 transactions. Hope you are able to recollect that. And one more thing, the company director has got some 5 lakh worth voucher with him and is going and staying in a hotel, and the bill is 25 lakh rupees, and is paying 5 lakh using the voucher and balance 20 lakhs using his cash. Now, if they ask you what is the value of supply, the value of supply is 25 lakhs. Consideration is paid using voucher 5 lakhs and using cash 20 lakhs. It doesn't make that value of supply 20 lakhs. Value of supply is 25 lakhs. In the MCQ, there is a question, what is the value of supply? Value of supply means entire whatever it is paid, that is value of supply. Next, sir, we are providing an accommodation services to a foreign citizen. Of course, supplier is of India, recipient is from outside India. Because you are providing accommodation services to a US citizen, it doesn't make the place of supply falling outside India. Place of supply is dealt in section 13 subsection 4. Location of immovable property itself will be taken as place of supply. Okay, that one also please be careful. And one more small point here regarding long-term lease. The long-term lease means at least for 30 years you are taking lease, and long-term lease upfront payment of consideration is exempt under GST, including the preferential location charges also. If you remember, there was a clarification, including the location charges. They are nothing but part and parcel of this long-term lease, so it is exempt. So upfront payment of long-term lease is also exempt, and preferential location charges also exempt. These are the key points in this case scenario number 30. Okay, now let us move on to 31. In case of 31, nothing great points are involved. It is just regarding value of supply, small points only, giving discount will be excluded from the value of supply, all that. So nothing great involved. So only thing, for empty cargo containers, e-way bill generation is not required. Okay, that alone, if you remember, that is sufficient. That was the only point, which is like, in certain cases, e-way bill is not required. One such case is in case of where empty cargo containers are being transported, you need not generate e-way bill. That is the only thing here in case scenario number 31. So the next case scenario number 32, if you see, what are the key points here? Nothing but, see, first of all, here they are purchasing a commodity called X. Okay, so they are purchasing that, and purchasing for 5 lakh rupees at the rate of 100 rupees per ton. Okay, now the interesting thing is, while purchasing that, they have paid something called mandi tax on that purchase. So automatically that will also be added to the value of supply, that you should keep in mind. Now what they are doing, that this SR associates, what they are doing now, they are hedging this transaction. They are hedging the transaction of like this particular commodity what they have purchased. So he is hedging this transaction and undertook a derivative sale transaction in futures contract for the month of August at an NCDEX rate of 1100 per ton. But what happened later on the date of expiry of that future contract of the month of August, that is 31st August, commodity X, the rate of commodity was 900 per ton. So SR Associates squared off the contract without physical delivery for the month of August at the same rate. So what is happening? They are entering into a future contract. That means they are hedging this transaction where there is no delivery. If the delivery has not been taken, then we call it as derivative, and derivatives are nothing but very much within the meaning of securities. So this transaction is nothing but dealing in securities and no GST comes into picture. That you should understand. Next, there is one more thing like importing the technology, all the stuff, importation of services, RCM liability will come into picture. For that, they have asked the time of supply also. Apart from that, nothing much is there here. And please understand for this, like what the brokerages, what they are charging for this hedging transactions, whatever it is, they are very much taxable, brokerage, all this stuff. But that is not being tested here somewhere, anywhere in the question, I guess. So nothing to worry. So I'm just telling you the information that brokerage is taxable. But regarding that, there is nowhere discussion in the MCQ questions. So nothing to worry. Right. So this is what all about scenario, case scenario number 32. In case scenario 33, if you see, there are no great points actually, but only one point is regarding appeal actually. So the point is, there is a dispute here with respect to tax payment. There is a demand of IGST 600 crores. So they wants to go for an appeal. And for that, what is the pre-deposit you should make when you are going for an appeal to appellate authority? That is the point. Please understand, very important. See, when you are going for an appeal to appellate authority, pre-deposit is 10% of tax in dispute. Guys, understand, in dispute there may be tax, interest, penalty, all these things. But only on tax portion you should pay 10% as deposit, not on interest, penalty, all that. Now you may get it out, sir. Then in case of appeal, I am going only against interest or penalty. Then there is no pre-deposit only. Pre-deposit, the law clearly says only 10% of the disputed tax, not interest, late fee, penalty. Okay. So 10% of the tax or 50 crore, whichever is less. Okay, that is what the amount. So here 50 crore means 25 crores plus 25 crores. Suppose if you are going for an appeal with appellate tribunal, then it is additionally, you have already deposited 10%. Now you have like what lost the case there, you are going to tribunal. Additionally, again you should deposit 20% of tax. Same story, but now it becomes 100 crores. That means 50 crore plus 50 crore, whichever is less. Okay, in this case, because you are going for appellate authority, please be careful when you are reading the question. It is appellate authority or appellate tribunal. Appellate authority only 10%, appellate tribunal additionally 20% of the disputed tax. In this case you will compare 50 crores, in this case you will compare 100 crores. So here 600 crores is the tax in dispute, 10%, that is 60 crores or 50 crores, whichever is less. So we'll take 50 crores as the answer here. Okay, so what is the pre-deposit for going for an appeal before the appellate authority is 50 crores. Okay, that is what with respect to case scenario number 33. Remaining and all small points, nothing much to discuss. Okay, now we are moving into 34, case study number 34. Right, the next case scenario 34, we are left with 34 and 35, that's all. So if you see in this case scenario, the key points are nothing but when you're importing, nothing but just a quick revision of this point. When you're importing OIDR services from outside India, OIDR services from outside India to a non-taxable online recipient in India only, FCM. But OIDR services from outside India to registered person in India will be RCM. So you are liable to pay GST on that. And one more interesting point is, sir, directors who are employees for whom we are paying salary, there is no GST on that. But whatever the sitting fees we pay to them for attending the board meetings, even though they are employees, yes, directors, sitting fees is paid not because they are employees, that is paid because they are directors of the company. So on sitting fees, RCM will come into picture. Please be careful, even though the directors are employees. Next, one more thing, the company has taken life insurance on their employees as a part of their internal policy. For internal policy, understand, you will not get ITC 17 subsection 5 blocked credit will come into picture, because internal policy is different, statutory obligation is different. So this is not statutory obligations, hence no ITC is available for you. And one more interesting thing here is, see, another important adjustment, subsidy. Whenever you see subsidy from some NGOs, not a government, so obviously we'll add it to the value of supply. But understand, subsidy only when it is given which is linked to the price, then only you will add it to the value of supply. Here subsidy is 5 lakh rupees in lump sum. This is not somewhere linked to the price, please understand that. So these type of blanket subsidies which are not linked to price, they are not at all considered under GST, so no treatment under GST. You will not add it to the value of supply. Please be very careful in this particular case. Next, one more thing, sponsorship services provided. The sponsorship provided services provided to Mr. X, an individual. Sponsorship services provided to body, corporate or partnership firm only, it is coming under RCM. But for individuals, it is not RCM. So you should be careful, because by looking at sponsorship services, you will jump into RCM. No, it is not RCM. So these are the key adjustments or key takeaways from this particular case scenario number 34. Yes, finally we are into case scenario number 35. You can literally see, not only you are happy, I am also very happy recording this video from one day. Actually, for you, you might be getting it in 1.5 hours, something like that. But I am recording it for one full day. 24 hours time I have taken to record this. Okay, so I am finally happy. Yes, I am going to be finished with this case scenario MCQ on this video. Right, simple. In this, sir, the key points are nothing but here they said recovery agent services provided to ABC Limited. Understand, recovery agent services provided to banks, financial institutions or NBFCs, then only RCM will come into picture. But here some ABC Limited, which is trader of goods, in that case RCM will not come into picture. That you please be careful. And one more thing, security housekeeping services to schools, that is up to higher secondary school. Inside that school only it is exempt, but here outside the school campus, so it is taxable. That you check. Next, here this renting of motor vehicle, this fellow here is a non-body corporate. He's an individual Rishi registered in Karnataka. Okay, so non-body corporate providing renting of motor vehicle to body corporate where cost of the fuel is included. You know, RCM transaction, not that great one. But this is something very very important or interesting what I have found out, which will definitely make you to do mistake. See here, Rishi from Karnataka has got a contract with Tamil Nadu state to supply some goods, and the contract value is 5 lakhs. The moment we see this, automatically section 51 TDS comes into picture. Okay, now please understand, sir, what will happen now here. The tricky point here is the PSU has asked Rishi to supply them in the state of Karnataka. You will feel location of supply is in Karnataka, place of supply is in Karnataka, and recipient is registered in Tamil Nadu, no TDS. Like that, you will do mistake here. Please understand carefully here. Rishi is from location of supplier is Karnataka. Place of supply we should see. Place of supply, understand, this is bill to ship to model. You are billing to Tamil Nadu, which is in PSU in Tamil Nadu, and you are shipping to the state of Karnataka. Bill to ship to, billing to Tamil Nadu, shipping to Karnataka. Clear? Please understand that properly. In that case, they are asking you to deliver the goods in some different place of Karnataka. In that case, what is the place of supply? Place of supply is the location where the recipient is registered, who is giving the directions. The directions are given by third person who is located in Tamil Nadu. Hope you are able to understand this. So this is bill to ship to model. Here you cannot straight away say location of supplier Karnataka, place of supply Karnataka, no TDS. No, no, no. Here TDS will apply. TDS will apply. TDS will come. TDS at what rate? 2% on the payment. On the payment, that is 1,50,000. Okay, that is the answer. So please be very careful here. There is one MCQ here regarding TDS. Okay, so TDS will be IGST straight away. You can, without even going through the question, you can just say, I mean, without calculation also you can say 1,50,000, only IGST, it is interstate supply, so only IGST should be the answer. Okay, option B. So hope it is clear for you. Okay, option B. Okay, so that way I repeat guys, very very important, please understand, because the moment you see this question, you get a feeling that there is no TDS implication here. So don't feel that way, there is TDS implication, so please be careful. Okay, and now coming to the last case study, case scenario number 55. Guys, this case scenario 55 is exactly same like case scenario number 7, what we have discussed in this same booklet. Exactly same to case scenario 7. In case scenario 7, they have given something related to current, the previous financial year also, or current financial year, something like that. And 75% of the question is same here, copy pasted, that's all, same, ditto same. So no need to discuss and waste your time, so go with this. So now finally the closing remarks. Hope you have enjoyed this lecture or enjoyed the discussion, whatever it is. See, my only suggestion to you as senior is, we have to always enjoy our preparation, and throw away the thoughts which are not in your control regarding that. Please don't think about anything. Just focus on what is there in your hand. In your hand only preparation is there, and just focus on that. If you are thinking about something extra, like there are so many negative news etc happening in the market, all that, and if you keep on focusing on them, it is never going to help us. So please make sure you are just focusing on your preparation and enjoy the preparation, right? So if you like this, please make sure you are sharing this with your friends. Of course you will do that, I need not tell you, if you have really liked it. And thank you so much for giving so much of your time and so much of your trust on me. So wishing you all the very best. See you soon all as qualified chartered accountants, and will be waiting to hear that message from you all. Thank you so much everybody. Wishing you all success again, and Jai Hind.